that oil to come into the open, and we should refine it and then sell part of it to the Europeans or Americans who wants to use it. So oil is a major feature in this, and you can't just let it go. That's the only thing that keeps West Asia going. If they have no money, have no exports, no money, then where do they go?
True. Fair call. Sir, thanks so much for joining in today and giving us some perspective, which gets lost in daily translation. We look forward to talking to you once again soon, hopefully with the war being over, but no saying on that right now. But thank you for joining in today.
Take care. Bye.
Thank you. You too. I think all of us need to. And well, continuing with that line, we have a very nice conversation lined up with somebody who tracks industrials, electric utilities, and infrastructure research at JP Morgan, Atul Tiwari. And the idea of talking to Atul Tiwari when we first planned this conversation was to talk about this ambitious $185 billion monetization pipeline, and we will talk about that. But Atul, good morning, and can't not talk about the clear and present conversation around the India infrastructure capital goods sector exposure to the Middle Eastern region. And I'm not asking you to make a geopolitical comment, but we were talking to, for example, KEC today or an L&T some days back and some others, and everybody or a large portion of Indian companies have that Middle Eastern exposure. Is that a big earnings risk to what could happen to the sector Q4, maybe Q1, Q2? Do you have any thoughts here?
Yeah, so broadly it is very early to say as of now. It has been just 1 week, and my sense is for overall sector and the companies which have business in Middle East is that if at all, if there is any impact, it will be through some slowdown in execution near term, and maybe some under absorption of fixed overheads. But as long as this war winds down to a smaller war over next 2-3 months, then medium-term earnings should be okay. Okay, so our sense is that till now, most companies which have exposure, even they are commenting that it's too early to say anything. So as of now, the base case remains that it's pretty short-term, and the impact, if at all, is quite minimal.
Atul, what about the role that how do you say the PSU spends in India can do to mitigate some of this stress? Because as your report highlights, there is an ambitious $185 billion monetization pipeline, which could eventually lead to order flows as well. But can the government's priorities at times of geopolitical stress, crude being higher, CAD being impacted, etc., change? And therefore, could this perceivably large kitty of orders that could be coming infrastructure's way get altered because of other issues?
So actually, if you look at the recent history, the history suggests otherwise, right? So post-COVID, we saw Russia-Ukraine war, which led to a fair bit of pickup in crude even at that point of time. And actually, government increased its focus on infrastructure creation in India. And that is why for the broader infrastructure sector as well as for capital goods space, we saw a fair bit of pickup in ordering momentum in 2022, 23, and even 24. And our sense is that after a slightly sluggish past year or so, government is trying to re-accelerate the infrastructure creation pace in India. And at the start of February, we had budget, where we have seen government penciling in, about 12%, capex growth for FY27 after a sort of flattish FY26. And then just about a couple of weeks ago, government has put out a very ambitious 185 billion national monetization pipeline. So it looks like that, as per government's, thought process and the planning, the best way of countering all these uncertainties is to, keep focus intact and possibly even accelerate the pace of infrastructure creation.
And Atul, of course, these are strange times, so we'll actually be able to talk about this in great detail a bit later on, but I'm just trying to understand. You firmly believe that this monetization pipeline, which may actually happen whichever way the markets turn out to be right now, would lead to this kind of an order flow. I mean, the numbers could change a bit here and there, but you believe enhanced order flow for infra players is in the offing in FY27 and 28, and maybe longer also, but the next 24 months for sure.
Yeah, so we are actually already seeing a bit of that, not because of this pipeline, but if you look at the December quarter results of most industrial players, the domestic order inflows have shown signs of bottoming out and improving a little bit. And obviously, the national monetization pipeline is still ahead of us. So this 16.7 trillion rupees pipeline, will play out over next 5-6 years. Out of that, about 10 odd trillion is still FY30. So that will, help and add that process. But even outside the pipeline, we are already seeing some bit of revival in ordering for the domestic industrial needs. And near term in FY27, this is government's capex plan, which is leading to, this pickup.
Atul, hopefully we can revisit this when the markets are a bit more sane and there is a bit more predictability. I don't envy your job right now, but all the best. And thank you so much for joining us today and giving us your thoughts.
Thank you. Thanks.
All right. Fabulous report, guys. But just that the markets are behaving in such an odd fashion, it's difficult to try and make sense of fundamentals right now. It's pain right now.
Yeah. It's pain, and how? I mean, even out of the Nifty 500, there are only 7 in the green. 493 in the red. The advanced decline ratio is just showing you the extent of bearishness that we're seeing. And the thing is that there is no positive outlook coming in as well, with even the fact that finally the new supreme leader has been announced, and this name of Mujtaba, the son of Khamenei, was going around for a while, but they have now officially come out and announced it, is also a signal that Iran is digging its heels in. And not really listening to any of that rhetoric coming out from Washington that we will tell you who the new leader is.
Yeah, the Iranian president over the weekend mentioned that US can take their dreams to the grave. We will not surrender unconditionally. These are strong statements coming in.
Very strong statements. And the sad part is that 7 advances, as you pointed out, for the 500, that is an improvement from what you saw earlier today, where we started off with just about 3 stocks in the green, and now you have double that. So we have some cause for celebration, don't we?
I know you're being sarcastic. Tejas Networks, 8% down. I mean, this was one, seemed almost Teflon coated in all of what we saw last week, but that is also getting hit. JK Tires, of course, Bank of Maharashtra, because of what the farm loan waivers would mean for them. So a whole host of those stocks. If there was any reason for banks to look resilient, well, now there isn't anymore. So that's also hurting in. Question is, how does this spill into the primary markets as well? Remember, we had a massive pipeline of new issues in 2025, but it seems to have hit the pause button in early 2026. What are the key reasons behind? Nimit Dixit joining in with more.
Absolutely. Like you said, 2026 was supposed to be the year of an IPO boom, but it's turned out to be a bust. This is on the back of a huge last quarter in 2025, where we saw 33 IPOs at over 90,000 crores. And then because of that, we had a pipeline of 190 companies lining up to IPO in 2026. And this was worth 2.5 lakh crore. But in the first quarter so far, we've seen 10 IPOs come out at 12,000 crores. So where have all these IPOs gone? Now, there's a short-term reason and a long-term reason. The short-term reason is, of course, market volatility. Whatever's happening around the world today, it's been a problem for everybody. Everybody is pausing to see, waiting for the markets to calm down. But the long-term reason is more interesting. The long-term reason is there's a pricing reset between how public investors value a company versus how private investors do it. Private investors look at growth 10x, 20x, and they have huge valuations for these companies. But when they go to the market, which is now the public investors consist more of domestic institutional investors rather than foreign institutional investors dominated by mutual funds, they look at stable growth. They look at the revenue. So they value it a lot lower. As you can see, listing gains because of that have been 2.2% so far for IPOs this year. Very low compared to 16.5% at the same period last year. And only 4 out of the 10 IPOs have actually managed to list above their issuing price. It's not all bad news so far. If you notice, experts say that going on, we're going to see trends where the IPO boom is going to come back. We're just waiting for that one IPO to work. We're waiting for markets to settle. And a pricing reset is not all bad, because it's going to mean we're going to see stringent long-term good valuations going into the future and strong gains and a lot of money for everyone.
Thank you for that, Nimit. The important thing is that domestic flows hold up. SIPs hold up. And really, we can't tell you one way or the other or give you any advice, and the aim is not to do that. But when you have the whole mechanism that mutual funds and SIPs have, and Alex, this is something you track so closely, it is when you continue your investments in periods like this that you eventually see the gains coming in and the multiplier force coming in, isn't it?
Yeah, absolutely. And those numbers, by the way, will be out tomorrow for the month gone by. So we'll get a sense. The last month was at a record high, 31,000 crore rupees in SIPs gross level. But what you're saying is absolutely right, because you're accumulating units. The minute those units become cheaper, you're buying the same amount every month. So therefore, you're accumulating more. You're never doing SIPs for 1 year. You're always doing SIPs for 3, 5, 7, 10 years. So when you think that far out, it hardly matters. You're actually buying more. It's great for you.
This is the point at which you make wealth.
Yes, you do. You could quibble about the timing. Yes, so over 5 years, I'm sure these levels will look very good. The only question is if now, because at 24,500, it looked very attractive to buy, and we are at 23, whatever, 700.
No, but the argument is on SIPs. SIPs continue.
SIPs, should continue ideally, because if you're looking at the growth of Indian GDP over a period of time, I think you will see at higher levels. I hope this 18 months of no returns doesn't hit the average investor sentiment.
Yeah, doesn't put people off. But then what are they going to do? Go and put it in FDs?
Gold.
I mean, even gold is going to cool off beyond a point.
You are right, Tamanna. But just that the conversations can turn so much, right? The neighbor will say, मैंने तो तुझे बोला था कि FD में डाल दे 5% मिल रहा था, तेरा तो नीचे है, 18 महीने से कुछ नहीं हुआ है. I hope that doesn't start really. It can very easily start.
I've seen some maturity in Indian investors so far. We'll take a very short break here. That's all the time we have on India Market Open. But stay tuned. All of the action continues on NDTV Profit. Ask Profit up next.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी,
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Sing girl, sing girl, sing girl, sing girl, sing girl, sing girl. girl.
क्योंकि तू है
Single, 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 single.
baby I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome back to NDTV Profit. It is a gloomy morning, most certainly in terms of the market performance, and we'll try and get all your stock-related queries answered. I'm sure there are plenty at this point of time. My name is Puneet Zaveri. This is Mahima Chajani, and you're watching Ask Profit. If you haven't already, do start sending in your queries on the number that are flashing on the top of your screen. Very quickly, let's take a check of how the markets are doing, because a lot of queries, I'm sure, will be topical today, but it's a screen that's red. It's red all around. We're down and broken below the 23,800 levels, and almost certainly before the gift nifty gave that implication today, almost certainly we were all talking about 24,200 and 24,000 as a key support level. That conversation is now out of the window. 23,800 is something that we're looking at, and tells you the implication of the global volatility led by the Israel-Iran war, especially in oil today, up 20% both on Brent as well as the WTI, around 116 to 120 to the dollar for the oil, tells you about the implication. Let's look at the heat map also, and that'll give you perspective of all stocks that are directly impacted by the volatility in oil. You're seeing Interglobe Aviation as a key stock, and we'll put focus on that in terms of our questions as well. Down almost 6%. SBI is down, and SBI as a counter has done well for its investors. Strong fundamentals, but the market's not having two bits of it today as well. The auto companies are down and out in that sense. Maruti, M&M as well as Tata Motors PV. Three companies in the lower of the top six, which are lower the most in terms of the Nifty 50. L&T is also down 4.5%. So is Eicher Motors. While the other the other plays in the oil and gas space are also down and out today as well. So BPCL, HPCL are all impacted. Continues to be the pressure on the Nifty, but look at the sectoral heat map and that'll give you perspective as well. Nifty Auto is certainly one of the most impacted in this, but you're also seeing the PSU banking index down today. You could put some pressure of this because of the volatility that we've seen here, but also the Maharashtra waiver in terms of that will have an impact on the PSU banks. The Nifty Auto, the second biggest loser, and Nifty Bank, essentially the area of solace for the markets, is also down 4.3%. The last soldier essentially fighting alone has also broken down, lost out on that war itself. But private banks, Nifty, Bentel, all down in trade, Mahima, today. But the advanced decline ratio also, Mahima, would give you that perspective, right?
Yeah, absolutely. And before that, we were just seeing those flashes on the screen with rupee also hitting its all-time low at that 92.3 odd rupees per dollar. And I mean, that's the kind of impact we see. Even with regards to crude, right? We were just talking about how the expectations could be $100 per barrel, but over the weekend, it shot to that $117 per barrel. So I think we'll have to wait and watch out for as to how this goes down further. But only hoping for positivity. But the advanced decline ratio that Puneet was talking about, the kind of pressure that is there in the broader end of spectrum is even worse, right? Last week we saw a low of 200
yeah.
And today we are seeing that low of 164. I don't think that I have ever seen that in the last 2.5, 3 years that I've been actively tracking the markets. But I mean, this is something, and the gap is in fact widening, and we'll have to wait and watch out for us to how that fares. The mid cap 150, let's try to pull that up, is down by about 3.2 odd %. The small cap 250 is also down by about 3.3 odd %. So that's it with regards to where the markets go. But let me quickly get in our guests as well. Avinash Gorakshakar, founder and head of research at Avinash Mentor Research Services, and Milan Vaishnav, CMT MSTA, founder and technical analyst at Gemstone Equity Research, joining us now. Milan, first of all, before I go on to take all the questions, your take on the markets, because we have broken the, kind of supports that we were talking about in the last week. We're well below the 23,800 levels now. What is the kind of support and resistance that you are now looking at the charts?
Good morning. Thank you for having me on the show. I would rather go ahead and adopt a more realistic approach here. If we talk about supports and resistance levels, they aren't going to work in this kind of markets, nor would be the fundamental structure of any company would support the kind of negative price moves that we are seeing. Essentially, we need to understand one thing, that whatever we are seeing is a very strong sentimental reaction to whatever that is going on in the Middle East, in the West Asia. That is point one. And second thing, we need to also bear in mind that we aren't a disconnected market. We are not isolated from the world. And all the negativity that is going on is bound to affect us. Now, importantly, having said that, I also need to very categorically highlight that our underperformance would be much lesser as compared to the markets that had run up much ahead of their curve, like Korea and Japan. So yes, we will see some negativity. It is not as such feasible, or rather it would not be prudent to try and pinpoint any particular level. But I think that anywhere around say 23,000, 23,500, that zone should see some tapering of the negativity that we are seeing right now, at least for the time being.
Got that view, Milan, and welcome to the show. But let's go across, take our first caller now. This is from Vijayawada, and Vassel is actually dialing in. I hope I'm pronouncing your name correctly, but welcome to the show. What's your query?
Yes, sir. I'm having Motilal Oswal shares at the price of 926. I'm having 780 shares.
Okay.
At the price of 926. Give me a suggestion whether to make it average or should I go on with the loss and sell that.
Are you a long-term investor or is this a short-term bet and you're looking to get out?
I want to wait it for another 2 to 3 years, sir.
Okay, 2 to 3 years. All right. Let me welcome in, Avinash now. Avinash, good morning. Welcome to the show. Definitely a tough morning for the markets. The question from our viewer is largely on Motilal Oswal. He's bought it at 926, holding considerably 780 shares at this point of time. Is there enough evidence to suggest to average down at this price point?
Good morning, Puneet. Puneet, before answering this question, just wanted to share that the last time crude went up to 150, it was 2008 June. After that, there has been a very big roller coaster ride.
Right.
Normally during the wartime or during a crisis, these kind of prices are completely unpredictable. But I think, now coming to the query of the investor, I think financials have been hit very badly. Banks, financials normally get hit very badly in such kind of time. So, you must understand that if you bought Motilal Oswal, are you willing enough to stay invested for the next 3 to 4 years? This is a great franchise, very strong management bandwidth. And in a growing economy, capital-related intermediary stocks definitely do well. So I would suggest that, if you have the heart to, stay invested for the next 2 to 3 years, and have the conviction, definitely you should stay invested. If possible, try to average a little slowly, not immediately. But I think definitely the next 2 to 3 years are going to be quite promising. So near term, yes, the trend is painful. The stock will definitely struggle a little bit. But over the next, say, 2 to 3 years, I'm quite sure that the bounce back will be equally sharper. In fact, you could get the bounce back in the next 12 to 18 months, hopefully, if the war ends and things get back to normal.
Okay, all right. So that's the view coming in on Motilal Oswal. The next one is also for you, Avinash. This is on HDFC Bank. Suman from Kolkata has bought 59 shares at an average price of 932. She's holding the stock for the next 1.5 years. Wants to know if she could go ahead and buy more or continue to hold the quantity that she's already holding. Avinash, what's the view like?
No, I think, the fall has not been very dramatic for HDFC Bank. So my sense is that if one were to average, one should look at slightly lower levels, which I don't think will happen because it's a widely spread stock, a large cap stock, and normally large cap stocks don't fall that significantly. But considering her time frame of, say, 12 to 18 months, I think definitely this stock has got all the ingredients to bounce back. I think there's no doubt that the banking sector in India is going to grow well. But I think in the near term, there are going to be, short trends of panic selling. So I think continue to hold and I think keep the faith. I think I'm quite sure in the next 12 to 18 months, the investor could get a decent risk reward.
All right. So that's the view on HDFC Bank. We've got Udit calling us from Delhi. Udit, a very good morning to you. How can we help you?
Good morning. Hi, I'm Udit. My question is on Sula Vineyards. I'm holding 1,300 shares at price of 201. I just want to check if I can continue to hold, especially with the recent Karnataka excise news and all going around.
Correct.
And also the grape harvest.
Right. Okay. I suppose that you're looking at a fundamental view for this particular counter, right?
Yes. Yes.
Okay. Avinash, I mean, this counter has, seen a downhill since, for the past 3 or 4 odd quarters. And, somehow the volumes are not growing for Sula Vineyards at all. And that's why we've seen the stock also tanking. Considering the Karnataka move that has just come in with regards to, no capping of prices by the government, might benefit for sure, but still we'll have to wait and watch out for as to how Sula Vineyards can benefit from this particular notification coming. But overall, volumes plus precedent above category is not growing for this one. What's the view like?
Right, that in the last 3 to 4 quarters, volumes are not growing, margins are coming down. Most importantly, despite having a very strong brand in the domestic market, wine sales have not taken off the way the company had expected. And that's the reason the stock has been hammered from almost 300 odd levels to, 160 odd levels. See, my suggestion is that despite the relaxation in Karnataka, it may take a little bit of time for a player like Sula Vineyard because wine, drinking in India is a very relatively new concept. Not many kind of large customers in this category. I think the investor should actually wait for another quarter and then I think look at switching over to some liquor stocks, which I think would benefit the most. Something like a Radico Khaitan or maybe a United Spirits, which definitely are going to benefit significantly. In fact, one could also look at Tilak Nagar Industries. I think they have also taken a very big acquisition of late, and I think their market share in the south has increased significantly. So I think, rather than waiting, probably if the investor wants to make his capital work faster and more better, then I think a switch is advisable. Sula Vineyards, I don't think January to March quarter is also going to be anything great. So it's better that he switches over to either of these stocks.
Got the view, Avinash. Definitely the Karnataka ruling a big positive for United Spirits. 15% volumes coming in from that state itself, but a strong one there. Next caller coming in from Amchi, Mumbai itself, and Nishad has a stock query for us. Nishad, good morning. Welcome to the show. What's your query? Hi Nishad, am I audible to you?
Yeah.
Yeah, go ahead Nishad with your query.
Yeah, I'm holding ONGC and Oil India.
Okay.
It is around 15% of my portfolio. I had bought it because I had thought that oil prices are going to go up.
Right.
I had bought it when oil prices were $60. Now
Right.
it's at almost 120, but the stock hasn't gone up.
Right. Got it. Fair point, Nishad there. Avinash, actually, let me come back to you on, this one because, it's a very volatile time, right? You will see some time for what happens and if this actually comes back to earnings for ONGC and Oil India. But what would you recommend at this point of time to Nishad? It's 15% of his portfolio. Avinash, what should he do?
No, I think my guess is that he should continue to hold. See, because some part of the oil must have been hedged at a relatively lower price. And that could be the reason the stock is not going up. But January to March quarter, once this quarter is over and obviously if this war continues, then there are very strong chances that oil could further gallop down to 120, 130 $1 a barrel. And at that point of time, upstream companies like Oil India, ONGC could definitely benefit. So I think, he could still take a call of holding on because it doesn't seem that the war is going to end in a hurry. It could take at least another 3 to 4 weeks before any solution comes in, which also is an optimistic kind of scenario. So I think he should hold on. I think he's got the right stocks in this kind of market because upstream companies will definitely be in a positive shape considering the rising, crude oil price scenario.
Okay, all right. The next question that we have is on ITC, and Arvind is asking this question. He says that he's received a good dividend on this particular counter. But with regards to where the stock goes, can we expect a bounce back in this particular counter in the next few coming months is the question coming in. And can he buy at the current levels? Milan, I'll come to you on this one. What's the view like on the charts for ITC?
I think he should not be buying it in a lump sum kind of a buying. One-time purchase is not advised in ITC. What I would suggest that he can enter 50% of the quantity that he would 50% of the quantity that he would otherwise like to enter, and wait for a definite base formation or some at least initial reversal signs to appear on the chart. After that, he can go on and buy the rest of the 50%. So yes, he can buy, but not exceeding 50% of the quantity.
Got that view, Milan. But the next question also, Milan, coming your way, and this is on Bellrise Industries in the auto pack. Now, our viewer Ramesh has bought it at 165, holding 200 shares, asking what he should do and what's the outlook now for the short-term perspective. Milan, let me also just extend that question a little bit because you're seeing correction across the board for all of these players. Today, Uno Minda down 7%, so is Suprajit down 4%. But any view on the short-term outlook for Bellrise also?
Bellrise has been a relative outperformer. If you look at it from a short to medium-term perspective, it's a different thing that it had attempted a breakout in the previous session, which has failed today, but it is just seeing a kind of throwback. That is what we say it in technical terms. Coming to the query, the person who has asked this is holding it at 165, if I'm not wrong.
Yes, Milan.
Yeah, so what I would suggest that he should hang on with the stock and keep his cost, that is 165 as a stop loss, so that he doesn't end up making a loss on this. But ideally, by and large, he should stay put with Bellrise. And just to repeat, to make things clear, his cost, that is 165, should be the stop loss for this.
Okay. All right. The next question is also for you, Milan, because this is an ICICI Bank, and Raja wants to know if this is a good time to add more of this counter. Would you recommend that, seeing the charts?
Add more, yes, but in large quantities and aggressively, no, because there are no signs of any base formation. See, the thing is that we need to wait for some basic base formation or basic reversal signs to occur, and it generally comes once you see some of the lead indicators start to positively diverge and some sort of relevant technical formations are seen, which is not the case with ICICI as of now. So looking at the price, he can add, but not so aggressively. Maybe he can start buying 15-20% of his existing holding, if at all he's holding right now, or whatever he wants to buy, he can start with buying 15-20% of the quantity and wait for some good signs to appear, and he will need to buy this in a staggered manner and not in a one-time lump sum way.
Got the view, Milan. But the next question, it's on Cornex Industries. Let's pull up that counter. Let's show the today's chart and the one-year chart as well, because our viewer has bought it at 52 shares, bought at 850, and this is Pooja. Let's look at the one-year chart also, because down 6.5% today. One-year stock's done decently well, almost up 20%. Now, Avinash, he wants a long-term view. Since he's bought it at 850, stock's at 968. Are you in a favor of continuing to hold this particular counter for the long term? What would you suggest, given that we're seeing money being taken off plays, especially where there has been returns generated over the last year or so? What would you recommend?
No, I think he should continue to hold. I think currently, the sentiment is weak. My sense is if he can give in another, say, 6 to 8 months or maybe a year, I think definitely he should hold on. My thinking is that, the stock can definitely show a good bounce back, but I think it will take a little bit of time. So as of now, I think rather than booking a loss, it's better to hold on, at least for the next 6 to 12 months.
Okay, all right. The next question is on iron exchange, and this is from Venkat Ramana, who's writing us from Hyderabad. He says, is this the right time to make a fresh entry into this counter? Please explain with fundamentals, as he's a long-term investor. Avinash, I'll stick with you for this one. What's the view?
Yeah, I think longer term, the water purification, market is a very large market. Plus, iron exchange operates on very large turnkey orders, and they've got a decent order book. So my sense is that, these kind of companies have the potential to bounce back. I think in the short term, there will be a little bit of panic. But I think, yes, if investor wants to buy in, I think he should use an SIP approach. Try not to put your entire capital in one shot. Try to, maybe deploy 20-25% of the money you have. And I think closely monitor the moment, because any dip should be used as a buying opportunity, maybe at even lower levels. But yes, longer term, you're structurally positive on the company.
Got that view, Avinash. The next question, that's coming in now. It's on a couple of plays yet again that have done well. Now, one's on Eon Exchange. Our viewer Venkat Ramana actually wants to take a fresh entry. So did you just take? Yeah. Okay, you just took this question. Okay, let me go across to the next one then. On Greenply Industries, actually, this counter has not done too well over the last year. Our viewer is holding 1,500 shares, bought at 403, and that is Shahid. He's currently sitting almost at a 50% loss. Not mention his time frame, but Avinash, would you suggest exiting this counter, or what would you recommend him to do? He's down almost 3 lakh rupees. Your view?
No, I think, the MDF market has seen a lot of oversupply, and I think that has been the main reason, the stock has underperformed. Plus, the kind of price the stock, has been purchased has been a very high level of price. So to expect the stock to go up from 190 to 400 is definitely not an easy task. I would suggest that, you should look at the banking sector. Many stocks are available, something like a Federal Bank, or maybe something like a Bank of Maharashtra. I think despite the fact that the Bank Nifty is down today, the banking sector is one sector where I think it has got us a lot of resilience to bounce back. The Jan to March quarter is going to be good, and hopefully, if this war ends, then I think something like a Federal Bank can give him a better kind of decent return compared to a Greenply, because as of now he's almost 50% negative, and to get that 50% negative, it will be a Herculean task to get this price upward. So Federal Bank seems to be a better choice. I think that would be a better kind of switch in the current scenario.
Okay, all right. So that's the view on Greenply, but it's time to take a look at the F&O space, and we have Sharad joining by as always to give us a perspective. Sharad, I think F&O investors today for sure are shedding tears.
Yes, and those tiers might be of a bigger size. The problem is massive sell-off is happening, and you can see there's nothing green except HCL Tech. Who knows, that might also turn red, but sea of red coming in, and larger players, L&T, SBI, Interglobe Aviation, all of them falling not 1-2% but 4-6%, and that's really eye-popping. BankX also, the story remains the same, nothing major happening here, no support also coming in, and important technical support levels are breaking even for BankX now. Already Sensex positioning is weak, but let's just see what stocks are there. Long build-up, I doubt there'll be any stocks here. But interestingly, MCX and Coal India does make it to the list, but how much it will sustain, that's a big question. Apart from that, let's also look at the short cover, there is no short covering candidate, sorry. Long unwinding is happening for SAIL and PFC. And short developments, you can pick up any stock, to be honest. Right now, we have picked up Uno Minda and Interglobe Aviation. This is an absolute bloodbath happening in the screen today. And if you are a trader, and if you don't have that much discipline or allocation, stay away from the markets as of now.
Got that view, Sharad. Down and brutal that FNO set up today by Sharad, but no things hidden in that sense. But let me go across and start the rapid fire round in this edition of Ask Profit. Milan as well as Avinash, keep your answers on buy, sell and hold so that we can take as many in the next 3 minutes. The first question that's coming in is in terms of a long-term query now on ITC bought at 320. We took the short-term one. Avinash, would you stay away?
Yeah, I think as of now, I think it's better to stay away.
Okay, Jindal Drilling is the next one, a short-term view on this one. Milan, I think this is a only beneficiary that's seeing a gain today. What's the view like on the charts?
I didn't get your question.
Jindal Drilling, short-term view on the charts.
Short-term view is a hold.
TCS bought roughly at 3,000 rupees by our viewer. What would you recommend, Avinash?
No, I think continue to hold. I think long-term positive, short-term there might be some pain.
Okay, SBI is the next one. Sunil is asking this question. He's got 200 shares at the levels of 800. Hold or sell? Milan, your view?
You need to move out of SBI.
Interglobe Aviation bought at 3,700 by Rajesh Maheshwari. Should he exit this counter now, Avinash?
No, I think he should hold on.
Okay, KPIT Tech, can I invest at the current levels? Vijay is asking this question. Milan, your view?
No, you should not.
Milan, Hindustan Zinc bought at 535 by Siva. He's holding almost 5,000 shares of this counter. Should he continue to hold?
Sorry, it's bought at what price?
535, Hindustan Zinc.
Yeah, he should hold on to it, maintaining a stop loss of 550 on it.
Lemon Tree is the next one. Is this the right time to enter the counter from a short to medium term perspective? Sunil Rai from Bengaluru is asking this. Milan, your view?
No, I would not recommend entering into this.
Karur Vyasa Bank, is it a good time to enter, Avinash?
Yeah, I think if the horizon is 12 to 15 months, he can definitely buy.
Okay, Samvardhana Motherson, can I invest 1 lakh currently? Is this the right time or should I do it in 2 phases in intervals? Avinash, what would you recommend?
No, I think one could definitely look at doing an SIP here. I think maybe 25-30% now, the rest later.
Okay, alright. So that's the view on Samvardhana Motherson. But with that, viewers, it's time to slip into a very, very short break. We all know that you have a lot of queries or that you want to be answered. So stay tuned. We'll be answering on the other side of the break.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged and culture takes center stage.
जब देश पे हमला होगा तो तभी आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
इट्स ओके यार
NDTV Creators Munch where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
first India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji. Jingle, 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 jingle. Bas aaj ka. Jingle, 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 jingle. Chal kare thode. Sing girl, sing girl, sing girl, sing girl, sing girl, sing girl. Kyunki tu hai. Single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for
Welcome back. You're watching Ask Profit right here on NDTV Profit. We still have Avinash with us, and let me also welcome in Ajit Mishra on the technical side. He's the SVP Research at Religare Broking. Ajit, very good morning and welcome to the show. Ajit, before we go ahead and take queries, are you in the markets right now looking to buy or just avoiding the falling knives, avoiding to get bruised today?
Yeah, good morning, Puneet. So, Puneet, buying definitely is not on the cards. Considering the kind of upswing that we are seeing in crude right now, means we are inching closer to $122 mark, which is definitely a very strong hurdle. But at the same time, since the scenario is still not very conducive, but yeah, selective, pockets are still holding strong. So some of the counters from the pharma, defense, they are definitely offering buying opportunity, but not in the index for so far.
All right, so that's the view on the markets. We've got Sharja calling us from Hyderabad. Sharja, a very good morning to you. How can we help you?
Hi, Mahima.
Hi.
Yeah, I need stock picks from summer-based theme stocks like PG Electroplast, Plast or Symphony, or else any defense stock for a span of 6 months time period.
Okay, got your question, Sharja. I'll take this up with Ajit. Ajit, she's looking at some counters that she can play the summer theme with, or any counter in the defense space that you're liking on the charts right now.
So Mahima, my suggestion would be, instead of focusing on any particular stock within the defense basket, she can consider going ahead with the ETF, that is the defense ETF, because the defense index has completed almost 1.5 year of consolidation. Today we are seeing marginal bit of profit taking in line with what we are seeing overall. But MO Defense, and I guess there is another from Grow also. So she can consider going ahead with those ETFs instead of betting on any particular stock. And in case if she is considering only one stock, then BEL definitely is something that she can consider, citing its outperformance. And we expect that to continue in the coming month as well. Now coming to the summer theme, so Voltas definitely looks upbeat, considering that here also we have seen almost 1.5 year of consolidation. Stock has witnessed decent recovery also, but after this marginal downtick that we are seeing at present, is basically offering a good accumulation opportunity. So instead of buying at one go, she can consider accumulating in this range of 1380 to 1400 mark. With a closing stop at 1300 and positionally 1600, 1680, that should be her target zone.
Got that view, Ajit, but definitely money being taken off the players that have done well also, even in times of war. The defense team down today as well. But the next question that's coming in, Avinash, it's your way. Shankar from Delhi is asking, in this current market downturn, would you identify 5 large cap stocks that can you suggest to buy right now? Avinash, there have been multiple views here that large caps still have a long way to go in terms of correction, in terms of valuation, but there is also the counter argument that it's not done well in the last 18 months. Which camp are you on? Any picks that you would suggest?
So I think large caps or mid caps or small caps, Puneet, I think you need to understand that you need to have a lot of guts in this market to go against the trade. So I think if one were to look at names, I think we still continue to be positive on companies like Mahindra and Mahindra. For that reason, something like an Indian Hotels, something like a Apollo Hospital. These are large companies which have got very strong visible earnings, on their kind of balance sheets as well as profit and loss accounts. And in this market, I think you got to invest in companies which can survive the next 3 to 5 years. So I think these 2-3 choices are enough for an investor to start deploying money, that too in an SIP fashion, because in this kind of market, nobody is spared. Even the large caps are beaten down. So I think try to deploy 10-20% of your capital, wait for some time, wait for clarity to emerge. And I think these companies will generate a lot of wealth for you over the next, say, 2 to 3 years.
Okay, all right. So that's the view coming in on, the entire large cap space and, of course, the picks that Avinash has. But we've got our next caller. Vinod is calling us from Mumbai. Vinod, a very good morning to you. What's your query about?
Yeah, good morning. I have a couple of queries. The first query is I'm having a surplus 10 lakh rupees and I was just looking for Bharti Airtel, a lump sum investment of about 2 to 3 lakhs in that. I have a horizon of 5+ years, and for the balance money, I would like a couple of mid-cap stocks where I can buy in tranches during this dip for again 5 to 6 years.
Okay. That's a smart way of asking too many queries in one question, Vinod. I appreciate that. But I'll take this up with Avinash because Avinash, you already mentioned your picks in the large cap space. He's asking about one, Bharti Airtel, and second, any counters that you're liking in the mid cap space right now.
So Bharti also definitely deserves a long-term pick. I think again the question is, what kind of underperformance the investor is willing to face. My sense is rather than putting the money in lump sum, put say 20-25%, wait for the markets to settle down. And I think Bharti Airtel is definitely a good company, a very good long-term player in the telecom business. So they would do well, but in this kind of market, it's always better to allocate your capital carefully. So maybe an SIP in Bharti Airtel could be wiser. And as far as mid caps are concerned, I think the hotel space has been doing very well. So I think a company like Lemon Tree, they have announced a massive restructuring. Very soon the company will become asset light. So for the next 4 to 5 years, if the investor has the conviction, I think Lemon Tree definitely has the potential to make a lot of money for the investor. So these are bets where at least the business inherently is strong and the balance sheet will get better over a period of time.
Got the view, Avinash, and we're throwing all these questions at Avinash where he's clearly saying don't buy, stay away. But Avinash, we already apologize for all these because we are getting so many queries at such an important time today in the markets. But the next one that's coming in is on Canara Bank. Avinash, I'll come back to you. Divya, who is a regular viewer, has actually bought it at 148. Now, Avinash, what would you recommend? Because we're seeing correction, very big correction on the PSU banking names, and these have done well for investors, right? Should she wait for some more time for it to come down and then buy? What would you recommend to her, as well as what are you seeing with the Maharashtra loan waiver? Are you looking at the other non-Maharashtra names in terms of the banking back now?
No, I think my guess is the Canara Bank has been doing very well. It's one of the large PSU banks, and as I mentioned to you, that in any kind of panic fall, the first sectors to get hit are obviously the crude dependent sectors and the financials and the NBFCs and the banks. So I think in that context, this fall is not completely anticipated. But I think Canara Bank is definitely a strong bank. They have a large digital space. Where they operate, most of their apps. Then I think they've got Canfin Homes, which is one of the larger, housing finance companies in South. So my sense is that definitely, I think, the investor should take a 2-year view. I mean, if he wants to stay invested here, I think keep a time frame of at least 18 to 24 months. Banks are going to do increasingly well. And I think, as I said earlier, it's very difficult to pinpoint what price the stock will come down finally. So it's better to allocate, say, 10-20% of your capital, and remaining, ammunition and gunpowder should be kept ready. So whenever you get a further panic, you can add more.
Right. So that's the view on Canara Bank. We've got the next question from Jeevan, who wants to know a 2-month view on Phenolics cables. Ajit, I'll come to you on this one. What are the charts indicating?
So Mahima, interestingly, the stock has been inching higher for almost like a month now, and we are inching towards the previous swing high, and especially in the market like this, which is completely wobbly, and the stock is up roughly around 20%, 30% in this recent surge. Booking some partial profit around current levels definitely makes sense, and let this stock stabilize above 1020 for the next leg of the move towards 1080, 1100 mark. And in the interim, do maintain a trading stop at 920 as well.
Got your view, Ajit. But the next caller dialing in now is from Bengaluru. Madhvi has a stock query for us. Madhvi, good morning. Welcome to the show. What's your question?
I'm holding Jammu and Kashmir. The price is 120. I bought at 120 rupees.
Okay.
So can I add more at this price level, or I have to wait? Or any other bank apart from this I can add?
And is this a long-term bet, Madhvi?
Yeah, sure. I mean, like 3 to 6 months.
3 to 6 months. Okay, then let me go to Ajit then. Ajit, she's bought Jammu and Kashmir Bank at 120. What's a 3 to 6 month view?
So in fact, Puneet, we were seeing very strong traction till last week in Jammu and Kashmir Bank. Means the stock has almost ended its prolonged consolidation phase with very strong uptick in the volume. Today's move in the PSU pack definitely has rattled this stock as well, which is down roughly around 8%. But volumes are very thin. So in case Madhvi, we managed to hold 112 levels, she can continue to hold her position, but not to add more at current levels. Instead, HDFC Bank, which has witnessed a decent correction from the recent highs, and currently we are hovering around the long-term averages on the weekly chart as well. She can consider accumulating HDFC Bank within the private banking space with 3 to 6 months of time horizon.
Okay, all right. So that's on J&K Bank. The next question that we have is from Nihal Mohandas, who's writing us from Mumbai, asking if he can go ahead and invest in Britannia for the next 1 to 2 years, and at what price should he go ahead and invest? Avinash, your view on this one?
No, I think my guess is, again, Britannia is not a cheap stock. It is a fair to expensive stock. But yes, tailwinds in the FMCG space have started improving. We could see better numbers in the January to March quarter. So I think if he's got a 2-year view, my suggestion is, again, I think don't buy everything in one shot. This is a large cap stock, so it's better that you allocate, say, 10-20% of your funds immediately, and maybe the rest of the money can be deployed over a period of time. But yes, longer term, the structural positive trajectory of the company looks quite good. So over the next 18 to 24 months, the investor can make a decent risk reward.
Coastal Shipyard is the next counter. Ajit, would you recommend, if it's a buy right now on this counter, or wait for some more time, is what Ram Kumar is asking? What would you suggest?
So Puneet, we are seeing a bit of a pause or breather, but the sign of reversal is still not there. Means we have multiple resistances till 1650 level. So if the view is short term, then definitely I would recommend him to wait and let this stock surpass this hurdle. Or in case if we wish to accumulate, then probably closer to around 1300, 1350 is a better zone to look at. So at current levels, avoid, but in case if it manages to surpass this hurdle of 1650, then probably we may see a fresh momentum.
Yeah, all right. So that's the view on Cochin Shipyard. We've got Bindu calling us from Vijayawada. Bindu, a very good morning to you. What's your query about?
Good morning. I hold 1,000 shares of Vishal Megamart at 109. I can hold it for medium to long term, but today the stock has dropped like about 5%.
Yes.
So I know this is like temporary. I want to add more if it dips around 100. Is it good to hold or not?
Okay, got your question. Bindu, just help me answer this question. Is it the fundamentals that you saw while buying the counter, or was it the technicals?
I want to know about. I know that it was very good, like a profit.
Okay.
Last few quarters is profitable.
Okay.
Fundamentally, I know it is good, but I want to know technical.
You want to know technical? Okay, Bindu, got your question. Ajit, Vishal Megamart, since the past, I think 6 months, it's seen a downhill, and this is because the past 2 quarters have been under pressure on a higher base, to say the least, and they're doing good expansion considering a small retailer, right? But 30% of a downtick is what it's seen in the past 6 months. What would you recommend?
So yes, Mima, in fact, we are still seeing that the pressure is intact. Means of it also the rebound attempt was fizzled out when the stock reached to the long-term averages around 128, 130 zone. And since then, we are seeing that the stock has been gradually drifting lower, and currently we are hovering around the 52-week low. Still, we feel that this zone last time, post the IPO, this zone close to around 100, 105 was the area basically where we saw the consolidation before the meaningful up move towards 160 levels. So we are very close to that mark. So she can consider holding her position with 100 as a stop loss, but adding is not recommended at current level. Let the stock stabilize, form some base, and then probably we might see a recovery. In first level, close to around 118 would be the first area of resistance, and then probably around 130 mark. So if she's okay with like at least 3 to 6 month kind of a time horizon, she can continue to hold with 100 as a stop.
You Ajit, but the next question, Avinash, it's coming. We'll actually, before we take a question, let's cut across to S. Jaishankar, who's speaking on a key aspect right now.
To all of us. Nothing will go on record except the minister's statement. As honorable members are aware, this round of conflict started on 28th February 2026. It has witnessed not only fighting between Israel and the United States on one side and Iran on the other, but also attacks on a number of Gulf states. There have been numerous casualties, including at the leadership level in Iran, as well as will go on record except the minister's statement, as well as destruction of infrastructure in the region. At the very outset, government had issued a statement on 28th February expressing its deep concern and urging all sides to exercise restraint, avoid escalation, and prioritize the safety of civilians. We believe, and we continue to believe, that dialogue and diplomacy should be pursued to de-escalate tensions and address underlying issues. Sir, it is also imperative that the sovereignty and territorial integrity of all states in the region be respected. Given the gravity of the situation, the Cabinet Committee of Security, CCS, met on 1 March under the chairmanship of the Honorable Prime Minister. It was briefed on the airstrikes in Iran and the subsequent attacks in several Gulf countries. The CCS was concerned over the safety and security of the Indian community in the region. It also focused on the implications for regional security and for economic and commercial activities. The committee was apprised of difficulties faced by Indian travelers transiting the region and by students appearing for scheduled examinations in these countries. It directed all concerned ministries and departments to take appropriate measures to respond to these problems. Honorable Prime Minister, continues to closely monitor emerging developments and relevant ministries are coordinating to ensure effective responses. Sir, the conflict has continued to intensify and the security situation in the region has deteriorated significantly. We have noted that, in fact, the conflict has spread to other nations with mounting destruction and deaths. Normal life and economic activities in the entire region are visibly affected and in some cases have come to a halt. We therefore reiterated our call on 3 March for dialogue and diplomacy and spoke up for an early end to the conflict. I am confident, Chairman Sir, that the House joins me in expressing our sorrow at the loss of lives. Honorable Chairman Sir, while any development that negatively impacts peace and security in the world is deeply troubling, this ongoing conflict is an issue of particular concern for India. We are a neighboring region and understandably have obvious stakes that West Asia remains stable and peaceful. There are almost 1 crore Indian citizens who live and work in the Gulf nations. In Iran too, there are a few thousand Indians who are there for study or for employment. The region is key to our energy security and includes many important suppliers of oil and gas. Chairman Sir, the Gulf is also a major trade partner, accounting for almost $200 billion annually. The House is also aware that in the last decade, there has been significant investment from the region into the Indian economy. Therefore, serious supply chain disruptions and climate of instability that we perceive are serious issues. Furthermore, these include attacks on merchant shipping, where Indian nationals often constitute a large proportion of the crews. We have sadly already lost 2 Indian mariners and 1 remains missing in such incidents. I know that the House joins me in condoling their deaths. Honorable Chairman Sir, Government has been assessing the situation in West Asia continuously since the 12-day war in June 2025. We noted the indications of growing tension and cautioned the Indian community in Iran accordingly. On 5 January 2026, Indian nationals were advised by the Ministry of External Affairs to avoid non-essential travel to Iran. Those already resident there were urged to register with the embassy, exercise due caution, and monitor the embassy website and social media handles. A second advisory was issued on 14 January, reiterating this advice to avoid travel in even stronger terms. The Directorate General of Shipping, Mumbai, in parallel, issued its own advisory on 14 January for Indian seafarers, asking them to follow embassy advisories and avoid unnecessary movement ashore. Recruitment and shipping companies were asked not to deploy or send Indian seafarers to Iran. Sir, reflecting our assessment of the evolving situation, the Indian Embassy in Tehran issued another advisory on 14 February urging Indian nationals, including students, pilgrims, business persons and tourists, to leave Iran by all available means of transport, including commercial flights. They were asked to contact the embassy for any assistance and provided with 24/7 helplines. This was again reiterated in strong terms through another advisory on 23 February. Some heeded these advisories and have left the country. However, many others have disregarded them and remain in it. We are also in touch with our fishermen who operate out of it. This was the situation till 28 February 2020. Once the conflict commenced, the Indian Embassy has facilitated the relocation of several Indian students in Tehran to places outside Tehran. An advisory update with emergency contact helplines was issued on 3 March. Similarly, facilitation was extended to pilgrims for their internal movement. Indian nationals who were in Iran for business reasons were assisted to cross over to Armenia and return home. The embassy in Tehran remains fully operational, in fact, on the highest alert. They are totally committed to supporting the Indian community in this difficult moment and in assisting Indian nationals who may wish to cross international borders. Where seafarers are concerned, the Directorate General of Shipping, through an order of 2nd March, has constituted a quick response team for immediate response, coordination and support functions. This too will function on a 24/7 basis. Honorable Chairman, sir, I would like to inform the House through you that every Indian embassy in the region has similarly issued advisories. The embassy in Israel did so on 28th February and 1 March, UAE on 28th February and 5 March, Bahrain on 28th February, Qatar on 28th February, Kuwait on 28th February and 5th March, and Saudi Arabia on 20th February and 8th March, Oman on 20th February, Iraq on 20th February and 5th March. MEA has set up a dedicated special control room to monitor the situation and respond to queries from those.
Let him complete his statement. Let him complete his statement. You are not allowing him to make the statement. That is not correct. Galgalji, that is not correct. I allowed you to speak. Let him complete the statement. I will come back to you. Let him complete the statement. Please.
The MEA's.
Well, that was S. Jaishankar speaking in the parliament on the relief efforts done by the country in terms of the war that's going on in Israel as well as Iran. But viewers, unfortunately, that's all the time we have on this edition of Fast Profit. We'll take a lot more queries at 2 p.m. So do tune in at that time for the stock-related queries. But thanks so much for joining in. Stay tuned to NDTV Profit.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today is interesting companies there which we'll get in KYC, but before that I'll give you some hints. Try to guess it. Recently it has been on news also. That important hint also I'll be giving you. It's a Hyderabad based infra company, but it is making its inroads into pan-India player as well. Second hint I'll give you is a 1400 crore order win coming in and the company's market cap is just 3000 crores. So you see how important this order win is, and that is what has given me this interest on this company. This is the highest ever volumes have been recorded recently. Last week the stock price movement has happened. That's what has caught my eye. And to give in more perspective, the DIs and FIs have also been increasing stake in this company. It's a small cap company, but a lot of action is there, and that is why I want to get this company in KYC and give you the entire picture. Is there a new story brewing in this company? The company's name is Ramki Infra from Ramki Group from Hyderabad. This company is very interesting company, and let's look at why we are actually calling this company. There are a lot of reasons for it, and it has not been tracked by many analysts as well, and very little exposure, but nevertheless FIs, DIs are increasing slightly their stake. A 1402 crore order win coming in from Maharashtra Industrial Township, and this might be more. Further orders might come in. That's what the street is expecting. The order book outlook and the status, that is something which we'll ask about Ramki Infra. Also the third question would be how are the inquiries shaping up now, especially from the non-Hyderabad based work orders. Also another reason why Ramki Infra is of interest for us is the focus on their operation and maintenance programs. These are generally large contracts, multi-year contracts, and that is where the company is actually focusing on. And by when will the promoter shares pledge they reduce as well? That's a bit of concern with a lot of investors have written to me. So we'll ask that management as well how things are progressing, and the revenue breakup between Hyderabad and non-Hyderabad regions. That's something which we'll watch out for. And also if there is a global exposure, we will get all our queries answered. And on the show is Sunil S. Nair. He's the CEO at Ramki Infra, where Sunil will decode all of our queries which we are having for the company.
But now let's move on to about the company, what we should know about the company. It's largely an infra-based player, but there are some layers to it. So one by one, I'll get you all the details about the company. It was incorporated in 1994, 30 years plus. The company is old and it's a flagship company of Ramki Groups. If you are from Hyderabad, our viewers are listening, you know this group. It's present all across the city as well. Also, the company deals with urban solutions, building, wastewater and industrial solutions. So सिर्फ एक काम नहीं है कंपनी का, 3-4 काम है, and that's what we are going to decode here. They have completed roughly 450 projects across the sectors over the last 30 odd years. That's pretty interesting track record, and 185 projects in the water sector and 50 coming in the industrial sector as well. So more or less infra related company we have talked about, but order book is very much important. As of December 2025 consolidated basis, a 9,000 crore order book is there. So order book to market cap ratio agar dekhe, so we can see the order book is 3 times compared to 1 unit of the market cap. The debt, that's around 163 odd crore rupees in the consolidated basis. Largely this is very less compared to what the order book is and the financials are looking like, and this is the big win. I was talking about 1402 crore order win coming in from the Maharashtra industrial town, and let's get more details about this order win. This order win is for Dighi Port Industrial Area project. That's what the company has talked about, but let's get into the timeline of it. The project is expected to be completed within 930 days from the appointment date, and I was talking about the operation and maintenance part as well. That is a period of 4 years from the important dates which the company has given. This is the key order in focus which you should know. Also, apart from this, why the interest has come in this company, and largely nobody tracks it, and that's why I'm here to help you out to make an informed decision. Market cap just 3,000 crore and the order win is of 1,402 crore. That's the first query. The second interest is DIs and FIs have slightly been increasing the stake in the company. I'll show you that in the shareholding pattern analysis which we'll do. And also the street is expecting more positive corporate announcement to start coming in as well. That is where the interest is lying, especially in the circles or the dealers are talking about. The promoter pledge, however, still remains a concern. But nevertheless, the debt levels are on the lower side. And also one interesting thing, if you're tracking the technical charts, highest ever volumes are recorded recently in the company as well. So it becomes very much interesting to talk about this company and figure out whether we can create any alpha or not. Let's move on and talk about the ratings. In our KYC show, we have our basic ratings where we judge the company, and of course the numbers are the most important. Income statement, balance sheet and cash flow, that's what you should be focusing on. But also we'll see the return ratios. Kitna return ratios bana hai, ROC, that is the important parameter which we'll be tracking. Shareholding, last 3 years, how things have moved, promoter movement, anything, or FIs, DIs have been adding. That's one thing. Street cred, if you're a long-term investor, 5 साल में आपका कितना पैसा बना. Short-term investor, 1 महीने, 6 महीने, year to date, all of these details I'll get for you, and the valuations we'll check. In the company's history as well. We are not doing a peer-to-peer analysis here because they're having 4-5 segments to track, and outlook, especially on the company's infra segment, be it the company specific or the industry specific. So these are the rating parameters where we judge the company. But the first one is the income statement, and let's see how the numbers are panning out. Revenue top line, this seems a little bit of moderation coming in FY25. Remember, Q3 numbers are also there to look at, and largely we see the margins is always lumpy when you get a infra company to judge with. PAT has also reduced significantly from FY23. We see that lumpiness coming down to 210 crores in FY25. So a lot of mixed set of numbers are coming in. Let's get a little bit of more clarity in the Q3 numbers, how they are panning out, and this seems a bit decent, you could say. The top line growth coming in and a slight bumpiness in the margins. Profit is also definitely there. So net it's a neutral rating for an infra company when we see these numbers coming in. Also, let's talk about the balance sheet, how things are moving here. And balance sheet is something which I like for a company of this size, because the debt level is something which was a concern, but the total debt is just 163 odd crore rupees. That means they are managing the debt properly. But definitely the question remains is why the financing costs are high. It's evenly reserves are there, and the total equity setup is also looking strong. And largely the borrowings that has come down from FY23, look at the number, it's down to almost 570 crores. So definitely almost 60-70% of the debt has reduced, and the cash bank balance is at 160 odd crore rupees. So there is a good balance sheet management happening from the management. So it is a positive rating when it comes to the balance sheet. So we spoke about income statement, we spoke about balance sheet, but remember, for an infra company like Ramki Infra or any other infra company, cash flows are always lumpy. There are always issues happening, and this is not a major, reaction whenever I judge an infra company, and that is where the concern starts coming in. It's negative, the net cash flows here, and also this has reduced, compared to FY23. It seems like FY23 was a watershed year, but after that the lumpiness starts coming in. That's why the cash flow is not actually a good criteria to judge an infra company, but nevertheless it is very important, and I do not change those rating parameters in KYC. So it's a negative, so it's a thumbs down when it comes to the cash flow segment. But let's move on to the other segments. The return ratio, generally you demand or at least a 15% return ratios, ROC, for an infra company, and company has maintained that. In FY22 it was 19%, slight dip in 23, but then it is going up, it's up 21%, and it's maintaining that. So anything above that 15% mark, give or take, it's a good return ratios coming in from Ramki Infra. So I have given a thumbs up when it comes to the return ratios. But let's look at the shareholding, how things have come up, and promoters haven't largely sold anything. It is 70 odd %, but a concern remains is this promoter shareholding pledge. That's the concern definitely there, and that we will try to address this. Largely it's not tracked by analysts or neither fund houses, so it becomes my duty to get you the entire picture. FISDIs, however, they have been slightly increasing their stake, though it's very minimal, so you cannot see. We have done a lot of rounding off, but net minor increase from FISDIs are definitely happening. So largely we'll say it's a neutral rating when it comes to the shareholding pattern. Also, moving on, apart from the shareholding pattern, let's talk about the other segments which would be very much important, and that is the street cred. Street cred, if you're a short term, medium term investors, क्या आपने पैसा बनाया? नहीं. All three cases, the last 1 year, money hasn't been made. But if you're holding the stock for a long term, if you're a long term investors, 5 years, it's a multi-bagger. 449% of returns have been coming in. So balancing things out, right now I'll give a neutral rating when it comes to the street cred. Now let's talk about the valuations, and valuations, something it's very different. What we have seen, peak numbers around 4-5 years ago, this has come in. It was 120 times its P ratio, but then I've taken a 10-year average to actually balance things out. It was 32 times when it comes to Ramki Infra, and the current numbers I'm talking about, it is at 16 times. From the 10-year average, it is still 50% down. That means there might be some kind of value definitely emerging, and because the volume was so high, that is where my interest lies. Is there a start of an up move here, technically speaking, or are there important corporate developments building up for these small cap companies? This is important to track, and that's why I have given a thumbs up to the valuations. But let's talk about the outlook. Street is expecting more positive corporate announcements to come soon. That's what the chatter is all about. The second thing is the growth on the non-Hyderabad based projects. That is where the eye focus is on, especially on the Maharashtra side. The management's positive commentary coming on the execution. This is what we had heard in the Q3 presentation which we had seen, and the long-term O&M contracts, that is where the bullishness lies, and maybe the management is executing towards that segment. So net overall, this is the outlook picture looking like, and I'll give a strong thumbs up when it comes to Ramki Infra's outlook. But let's just gather all the ratings together so that it becomes very easy for you to digest the details about the company. Isko kitna rating humne diya? Income statement is largely neutral, balance sheet has been decent, and the debt level is very low. That's pretty much interesting for an infra company, but cash flows of course remains a concern. Return ratios on the higher side, 15% plus you can expect, and shareholding in street cred is largely neutral. Long-term investor, you have made money. If you're a short-term investor, last 1 year or you haven't made much money, and of course markets are also there where the overall correction has impacted small caps and mid caps. Valuations very cheap compared to its 10-year average, 50% down, and outlook is something where my focus is, especially if order announcements start coming in. So net
On the higher side, Ramki Infra is 5.5 out of 8, where we talk about the company. But apart from the company, we'll be talking to the management, and Sunil S. Nair, he's the CEO at Ramki Infra. Sunil will talk about the entire positions of the company. He's a chemical engineer holding a CFA certification, and that's a very interesting take. Education is from INSEAD, and he has a strong exposure to Middle East and North Africa region, and the leadership roles he had in Utuco, Litwin, CAI and Gulfar Engineering. So Sunil is a man of many hats, and joining in right now is Sunil. Good afternoon, Sunil. Always a pleasure to have you on our show. Sunil, first of all, this 1,402 crore order win coming in, especially from Maharashtra, your views on it, important takeaways on it, and what are the timelines we are looking at?
Good afternoon. Thanks for having me. I mean, this is a 1,400 crore EPC plus O&M. It's an integrated industrial park, which we are building it for, MITL. Largely, this is going to be completed over a period of 2.5 years. Design, build job. Largely, the scope involves civil infrastructure, which is including roads and bridges, electrical, water transmission, sewage network, electrical substations and distribution network, and water treatment plants. So it's an interesting job where we are one of the pioneers in building these industrial parks. We operate India's one of the largest for the last 20 years. So there's a lot of lessons from them, and we have just started the execution, and we are kicking off the job.
All right, so this is the important developments coming in for your Mumbai order win. But going ahead, what's the current order book looking like, and what's the expectation in the next 2 to 3 years? If you could give us any kind of a number for the order book segment, and which segments actually the inquiries are coming, Sunil?
Well, I think with these job, our order book stands a little over 10,000 crores, close to 11,000 crores, which has come from various segments, the 3 segments that we operate in: water, wastewater, industrial parks, and the civils and buildings. So largely these are distributed across these segments, but we see a lot of these happenings on the industrial parks, which are design, build, own, operate in both the water, wastewater segment as well as the industrial park segment. So we expect we are lowest in one of the very special pharma park in Maharashtra, which is expected to come soon. So that will also come into our order backlog in the coming days. I mean, we are quite bullish about the pipeline currently.
Okay, so management is definitely bullish on the pipeline. But Sunil, just to get into a little bit more details about how the order book is looking like, if you could just break it down into the sector wise, where you are seeing the highest inquiries or the client confidence coming in, because you are working in waste, water, roads, bridges and urban infra. So which of these segments you are seeing a really high inquiries coming?
So water, wastewater, there is quite a lot of interest. These are on HAM models, EPC models, and the long-term O&M contracts. Industrial parks, we have a solid inquiries across infrastructure, in Indian sectors. There's a big push from the central government on building up these parks. So then the third, obviously, on the building side, we largely support our development divisions, which are doing a 15 million square feet across India. So it's quite a balanced structure. If you look at it, everybody is contributing. Largely, industrial parks and water, wastewater would be our major focus.
Okay, so industrial parks, water, waste segment is something where the entire focus would be coming in. But Sunil, is there any international exposure which the company is having right now?
As of now, our exposure in the Middle East market is close to null, but we are very actively pursuing quite a large water, wastewater projects in that region. Even we are lowest in one of the jobs there in the Middle East, but we are cautious. We are watching what is the evolving geopolitical situation in that market. But what we get from our client is that there are no delays on these projects. So we expect to grow some of the water wastewater projects in that region.
There is water waste, that is something which we talked about. Desalinization is also something which a lot of infra companies are talking about. A lot of listed peers are also giving these services or these EPC services in the Middle East and the North Africa region. Are you looking to go in that segment also, the desalinization projects?
Obviously, this is one of the areas that we are looking at. I mean, we are looking at a number of desalination projects. Even in India, as you speak, we have just been awarded a small 100 crore project with the VOC of building a desalination plant and seawater intake and outfall. So, which is just kicked out with the execution last week. So, it's one area that we are looking at. But it depends on opportunity. We're extremely selective and disciplined in our bidding. So we have to be extremely careful which kind of a client, what kind of a structure, all of that are taken into consideration before we start bidding.
All right. Apart from that, the debt level seems very on the lower side, around 163 crores is something which I picked up from the Q3 numbers as well. What's the overall debt, short-term, long-term currently? If you could just give us a little bit of picture on that.
No, I think we have come out of the credit issues and we have cleaned up our balance sheets. Today, we are a clean company. The current 163 crores, which is we have monetized on one of our long-term annuity contracts. So our debt structure is very, very low compared to all the peers. So, I mean, that's some of the focuses that we have, a discipline on the financial side. We are quite conscious about what we are building and what kind of cash flows. We've gone through these ups and downs of this infra industry, so we are quite well aware of what's going on in the market, and our shareholders are also very keen to see that going forward we have a clean balance sheet.
All right, clean balance sheet, yes, definitely a little bit of lumpiness in the cash flows. That's of course your business model. But Sunil, I need to understand a little bit more on the margin profile. There seems to be a little bit of volatility in the margins. Going ahead, what kind of a margin you are targeting? The projects which you are actually bidding for, are they on the higher side of the margins, or is it the legacy projects? Because on a consolidated basis also we need to see the margins, and if yes, if you are moving towards the higher margin side, any kind of ballpark figure, I suppose it's around 16-17% right now.
Sure. I think if you look at it, our business model is a bit different from us typical infra companies in this market. We have OPEX and CAPEX. I mean, CAPEX is where a lot of these execution risk comes in, whereas these OPEX is that generates free cash flows and better margins. So we have a very well balanced portfolio. So that gives us a double digit in terms of our PAT. So going forward, we see that this is margin continue to remain very stable, and then there are new jobs which are coming in. We got those jobs at a decent, very reasonable rate. So we hope that the margins remains very stable going forward.
We can expect something between 17 to 20% as a margin.
Yes, it is expected.
Okay, that's the range coming in. But Sunil, apart from that, the question is, this new industries which you're talking about, is there any other new industry which you like to venture in, or the existing announcements or the industries which are already functioning in, that's enough?
No, as a company, obviously we are looking at opportunities. There is one sector that we are looking at is the carbon capture. The other sector we're looking at mining. So these are opportunities that are very specialized. And also we are willing to look at, there are water projects within the oil and gas industries, within the petrochemicals, where there is a requirement of, treatment of, water. So there are a few other areas where we are looking at. I think there are a couple of jobs that we have already started bidding on these lines. So we expect to see new orders coming in these new sectors.
All right. And apart from that, there are at times concerns also from investors who write to me. And a little bit of concern is definitely there is the pledge part of the promoters. Is there any timeline to reduce that going ahead?
Sure, we are in the last phase of that restructuring of our old legacy term sheet with various banks. I'll be hopeful that in the coming quarter that we'll be coming out of the old legacy, all the credit issues.
All right. Apart from this, Sunil, another interesting case is the overall revenue breakup. You know, the Hyderabad industry is something which we have seen a lot of folks from Hyderabad also write to us about your company. And one query has come in is that are we looking at any other value creation activity from Ramki Group? Because Ramki Infra is your signature project which is listed. Are we looking at any kind of other listings coming in from your group? Is there any value unlocking move left?
The other group companies are currently privately held, but I wouldn't be in a position to comment on it. But then there are a lot of activities on the and the waste management sector. They are a pretty large company. There are investments from VC and a development company. So I do not have any information on their listings as of today.
Okay, but you have given us a very 360-degree view. Thanks a lot, Sunil. For the company and the industry as a whole, it's always a pleasure to talk with you and give our audience the entire picture for Ramki Infra. Thank you very much, Sunil. So
thank you very much.
So that's the management of Ramki Infra giving us the entire picture, and the most important conversation is they might get more orders going ahead. So keep an eye on the stock. Volumes are high, and also by next quarter the share pledge of that legacy contracts will be over as well. Company just 3,000 crore market cap. Do keep a look on this. That's all, folks, for KYC today. Stay tuned to NDTV Profit.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
It's a bloodbath on Dalal Street today with jittery investors ducking for safer haven amid escalating geopolitical uncertainty and also surging oil prices. The global sell-off reflects on Nifty 50 today, which is trading just above 23,800. Sensex too crashed almost 2,300 points to trade near 77,000. Oil marketing companies under pressure as crude tops $100 per barrel and above. This comes amid a series of production cuts from major Middle Eastern producers following the disruptions in the Strait of Hormuz. All sectoral indices trade in the negative zone today, with autos and public sector banks hit the most. Metals lose all their shine, energy stocks and real estate lag in trade. Rupee fell to a historic low, breaching the psychologically significant 92 per dollar mark amid escalating geopolitical tensions and energy crisis. External Affairs Minister S. Jaishankar briefed the Rajya Sabha on the escalating US-Iran tension, saying that though India was prepared, there could be supply chain disruptions in the coming months. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and yes, there is carnage in the market. There's huge sell-off scene, and it's a global sentiment because of the geopolitical tension, and specifically for India. Remember, the oil prices, crude oil prices spiraling above $100 per barrel mark is actually a very big dampener for the Indian economy and the markets, and therefore that's the kind of drop down that you see on Nifty 50. There is no let up in sight, that is seeing more than 2% drag down. 570 points lost, and at the moment trading near 23,800 odd levels for Nifty 50. Sensex too has lost over 2,000 points in the trading sessions. All the sectoral indices are in the red, with PSU banks, in fact bank index, losing a lot of momentum. In fact, is a huge underperformance to the key indices. It's Bank Nifty, and therefore in terms of the contribution as well, the top banking names like HDFC Bank, ICICI Bank, SBI are the biggest drags on Nifty 50. In fact, IT is the only one which is showing some shades of green on some of the IT counters, but it's a broad-based sell-off, and mid-cap index also and the broader universe also losing ground with the same intensity as the key indices. Let's take it straight across to a market expert joining in, Amrish Baliga, who's an independent market analyst. Amrish, always a pleasure to welcome you on NDTV Profit. Today is an important day. The cut is getting deeper as oil escalates further, and the US-Iran tensions do not seem to de-escalate. What is your sense on the markets?
Yeah, good afternoon, Anisha. In fact, I think the only silver lining today is that markets opened lower and have recovered slightly. But this doesn't mean that it can't go down further going ahead. Because I think, from whatever news is coming, I think the Iran war seems to be entering a dangerous phase where I think the vital civilian infrastructure is getting attacked. Drinking water, for example, is an essential source of life. And that being targeted by targeting the desalination plants, I think this will take the war to a different level. Now, when it comes to India, I think we can manage 3 to 4 weeks without major disruption. But the fear is that if this war carries on longer than that, and as of now it seems to be, so then it can take a toll on the economy. And because of which we are seeing a major cut today. Because one, the oil prices have already shot up. And there are talks of oil prices possibly going to $150. In that case, the government may not be able to hold on to the retail prices the way they are. And that's going to have an effect on the inflation. And along with that, you'll possibly have the interest rates going up. All this time we're talking of interest rates falling. It may not even remain stable. It can even go up. And because of which we have seen the effect on the banking sector today. And not the least, but supply chain disruption is the other issue which is there, which I think beyond 3 to 4 weeks will have an effect on the various corporates which are either importing or exporting. So I think it's an overall effect on the market. So as of now, I would say possibly just wait and watch for a while. May not. Till last week I was saying possibly a dip is a good buying opportunity. But today, with the sort of news which is coming, with the sort of situation we are in, I would possibly say wait and watch for a while. Let's see as to how it works out.
Looks like, Amrish, to you that it's a falling knife that investors shouldn't attempt to catch at this particular point. What should be the strategy? Wait and watch?
I would say wait and watch. Not a time to panic and sell. Surely not at these levels. But if you're sitting on liquidity, possibly wait for a while longer. Let there be some clarity. Because there is also another school of thought which is talking about US not being able to carry on this much longer. And there could, at least President Trump may look at an honorable exit. So I don't know if that happens, that's going to be a major positive. And the day that happens, you will see the markets at a different level. So I would say not to panic at these levels, but don't invest fresh, wait for clarity.
All right, Amrish, always a pleasure speaking to you and getting your perspective on the market. Wait and watch at the current moment. No need to panic is the word coming in from Amrish Baliga. But there is a fair bit of selling pressure seen in the market. But let's focus on one particular counter. Let's talk about Jupiter Lifeline Hospitals. That particular stock is down by 0.6%. At the current moment, and Ankit Thakur, who's the MD and CEO of Jupiter Lifeline Hospitals, joins in now. Ankit, always a pleasure to welcome you on NDTV Profit. Of course, a few of the recent developments have really taken place in the company, which we can take stock of. So with the new Dombivli facility really projecting 2 to 3 crore rupees of monthly EBITDA drag in its first year, how will this really impact your overall consolidated margin margin outlook for FY27, and what's the picture looking like?
Good morning. So, yes, you're right. Dombivli Hospital has started. We have managed to commission before time. We were hoping for a Q1 next year commencement, but we finished it in the Q4 of the current financial year itself. Specifically addressing your EBITDA drag question, I think it is part of maturity of any greenfield hospital of this kind of size. We have built 500 beds here. 1 to 2 years of break-even time is anticipated. For that reason, this drag is built into our projections, and there is enough cushion in the company. We also have anticipated growth coming in from Indore and Pune, so we don't expect too much of a drag on the numbers on an absolute basis.
All right. So this is on account of the expansion projects, Ankit, and any projection on the timelines from when this could be remunerative on your overall performance? Any picture on that?
Absolutely. So as I said, 2 years is a experience that we have had in the past, that by the end of year 2, you should be EBITDA break-even or positive. And we don't see any reason why we should not be able to achieve this in Dombivli as well.
Right. And while you are, Ankit, on an expansionary phase at the current moment, which are the other geographies? Of course, North and East India is something that you're looking at selective greenfield expansion. What specific strategic criteria or return thresholds will really dictate your business outlook for entering the new geographical markets?
So you're right, North and East are quite attractive. However, as a board, what we have decided is that we would want to remain focused on Western India for the current phase of expansion. Besides Dombivli, we are already building 2 more hospitals. That is one more in Pune, which is 500 beds, and one in Mira Road, which is Mumbai North, about 350 odd beds. Besides this, we are looking at a couple of more opportunities, all West India based. We feel that there would be greater merit in concentrated expansion rather than a very diverse footprint at the current point in time. As far as the metric of choice goes, we don't really look at return thresholds specifically per se, but we look more to address the local demand-supply gap in the locations where we choose to expand.
Right. So, Ankit, you did mention Pune as well as Mira Road, and there are aggressive expansion plans in operations that you see. So, how will you really sustain the current EBITDA margins of closer to 23% at the current moment with expansion and that having its own lag effect, nurse shortage in the country, and also we are seeing some wage inflation? Are these critical concerns at the moment?
So the way we analyze the company and the performance internally is to analyze the performance at a unit level. When you are in a growth phase, naturally, as we discussed, the first year or 2, you will find some EBITDA drag on account of the new properties. However, what you need to monitor and ensure is that the existing properties are performing at the level of expectation. That is, a mature hospital should give something in the mid 20% EBITDA range, 25 or give or take. However, if you have too many new greenfields being launched together, then you may not get an accurate picture if you just look at the console numbers.
That's right. All right. So unit economics is also what you're focusing on. But Ankit, my final question, you did say that in 2 years you will look at a break-even point for Dombivli. Can you give us a little more picture on what specific volume drivers or payer mix shifts are you relying on to meet these robust operational outlooks?
So essentially, as I answered in your previous question, that the choice of location is demand-supply mismatch. Even in Dombivli, where we have opened, it is a very densely populated micro market, about 2 million people in 30-40 minute of driving radius. Currently, without access to any organized tertiary quaternary care facility. So by and large, what happens is the volume growth is pretty much organic in such dense residential neighborhoods, and there is no specific attempt on our end to drive it in one direction or another.
Right. And overall picture now, Ankit, your space is a very competitive space currently. Many of the private equity players have entered. Also, a lot of companies are consolidating their position. How are you placed in this? Is it going to be greenfield and brownfield expansions, or are you also looking at consolidating your position by way of mergers and acquisitions?
So honestly, my view is a little different. I think it is does not have as much competition as it needs. If you look at the country of a scale of India, there are essentially 10 or 12 companies in the listed funded space that you would be tracking. And if all 10 of us growing at the pace at which we are will not be able to meet the demands of the country even in the next 10 years. So I think there is just too much headroom for growth, and there is not enough supply being created. On our part, we therefore have a bias or a preference towards a greenfield mode of expansion. However, if some suitable M&A opportunity does arise, we are open to look at it, but our preference remains greenfield growth.
All right, preference remains greenfield growth, and you also answered a very pertinent question that if everybody is expanding with so much aggression, then is there going to be a crowded market? And you said that the demand is quite huge. When we talk about even the competitive edge, how do you see your edge over the others? Because a lot of companies with investor banking, investment backing is also looking at a bolt-on platform with a larger play in the hospital space.
So we are well capitalized. I think for our next phase of growth, that is, besides Dombivli 2 more, we'll be able to finish all of that just with our internal accruals and the reserves on our books. Even now we are net cash. So we will be able to double up in size from our listing time, free of debt and with internal accruals. Going forward, we do estimate that we may have some modest level of debt and continue our phase of growth and probably do one or two more before thinking of a round of capital raise.
All right, Ankit, always a pleasure speaking to you, and all the best for all your expansionary projects and also the expansion of the operational performance as well. Thank you so much for joining us right here on NDTV Profit. All right, moving on, let's also put the spotlight on one metal and mining major, and Vedanta is down about 1.8% in trade at the current moment. I earlier caught up with Deshni Naidu, the CEO of Vedanta Group, to take stock of the global headwinds and the geopolitical situation and the impact on the business. Let's listen in. It's a very volatile environment right now, Deshni. And yours is a global company where in metal and mining, there is global trade that is required. With the supply chain constraints because of the geopolitical tension, how do you see the impact at the current moment for the industry?
Yeah, so, Nisha, it won't be the first time that our industry, or industries for that matter, are rattled by supply shocks. We've gone through COVID, we've had the initial shocks of other wars, we've also had the shocks of the trade and the basically the tariff in the last year. I think we've become far more resilient in understanding our supply chains. But for Vedanta, predominantly, our raw materials come from India, and we supply, and the majority of our metals and minerals go back into India. So we are largely more resilient today. But of course, like every other executive in the world, I have commissioned a task team across the business to keep looking at our inbound, outbound logistics need to make sure that we can actually withstand the current situation. So we are far more resilient. We are a company that procures domestically, sells into the domestic market. That makes us a little bit more resilient, but we are not leaving it there. We have set up a task team to make sure that we can navigate through this.
Deshni, you well pointed out, even I was reflecting on this, that, supply chain constraint has been the order of the day for the last more than 5 years now, from COVID to tariff to now this. Now, I just want to ask you one more question on the global metal prices, the way they are right now in terms of volatility. How do you see this? What's the outlook on that at the current moment?
Yeah. So it's incredibly positive, Nisha. Yes. I think this has to be metals and mining's moment, as I keep saying, a generating opportunity. If you look at just the insatiable demand coming from infrastructure expansion, manufacturing growth, global transition. I was in the US a couple of weeks ago where everyone spoke about, copper's need for energy transition, for data centers, etc. So there's an insatiable demand. I think as India, we are incredibly blessed by the endowment that we have in the ground. We're also incredibly blessed by the increased manufacturing facilities that we have across. So I only see that strengthening. I don't see it as perhaps a one-off. I see it as a true valuation of the worth and the value of the metals in the ground that need to be extracted to deliver into the growing demands that I'm seeing in India specifically, but globally too. So this is the right price for the efforts that it is going to take to unlock that endowment.
All right. So the metal space that has been shining. But one more question before I let you go. A very important inflection point for Vedanta Resources and the group at this point, because of the group simplification, which was in the works for several years, now taking shape. What's the vision once that's completed? This very important milestone is really completed by the company.
Yeah, so we're very excited, by the NCLT decision in December. Anisha, we are in the process of executing against that. It's exactly the, link to the question you just asked me in terms of what's happening in the world. Our chairman has grown this incredible company to over 17 different verticals, 17 different companies today. It needed simplification. So each of those verticals, the 5 verticals that we are creating, will actually be able to use your words now, shine in terms of the opportunity that we see in front of us with commodities demand. So I think these pure play companies will do many things. They'll basically offer investors a very unique opportunity for the specific pure play commodities. But in addition, it'll allow us to have the respective balance sheets to be able to grow. And you've met our chairman on a few occasions, Nisha, and he's not stopping here in terms of the aggressive growth ambitions that we have across each of those 5 verticals going forward. So the stage is set. We've got the approval, we're executing, and we will start to unlock value in these respective businesses once the demerger is complete.
All right, so that was our exclusive chat with Vedanta Resources on taking stock on the movement of vessels, and they say that they stand resilient because of the domestic focus currently. All right, we'll keep a track on that, but my colleague Puneet is standing by with all the list of stocks to watch in the trade today. Puneet.
Well, thank you for that. Quality Walls is the first one. Now, this was, of course, the first quarter for this company in terms of results post-listing. This was demerged from HUL and stock, in terms of the Q1 results. They reported a net loss of almost 178 crores versus the loss of 100 crores in the same time last year. So definitely the street's not taking any cognizance of the fact that, that it comes from such a reputed franchise. The numbers are getting impacted, and this revenue was also down 30% in this particular quarter at 233 crores, while the EBITDA loss also widened to 64 odd crores. So we'll await more clarifications and details from the management of path to profitability at this point of time, but definitely stocks down 6% today in terms of trade. Meesho is the other one. Now, the company has actually gotten, an income tax demand of almost 1,500 crores, and stock was down 8% at the start of the trading session. Now is locked in a down circuit of almost 10%. It's had a stellar run post listing. Stock hit an high of almost 222 rupees per share, but since then has retreated substantially to 143 now. Now, the company is currently evaluating this assessment order and has mentioned that they believe that the adequate legal as well as factual grounds will be contested once they go through the review. So continue to monitor this stock as well. And the third and the final one is Neogen Chemicals. Now, the company has actually approved a fundraise, an equity fundraise of 161 crore rupees. Now, this is done at a price of almost 1610, which is at a premium to the current market price by almost 250 odd rupees. And hence, even on a day like this today, where almost all sectors and all stocks are impacted, Neogen is up 6% on this fact. It's also more than a 15% premium to the current market price. So continue to monitor all these aspects, but these three stocks on our radar today.
All right, Puneet, thanks so much for getting us the entire list of stocks to watch and to keep on our radar. Thanks so much. But to a very important story, which is also putting a fair bit of impact on our overall market condition. Well, it's the crude oil prices, and they surged above $100 per barrel, with the war really impacting the world's oil artery, and the Strait of Hormuz being impacted is a very big concern coming in. So which are the sectors that really stand to get impacted, and what does the math of the impact really look like? So Somit, who's my colleague, has been doing some number crunching to give us some perspective and the answers to the impact. Somit, tell us.
Well, if you look at Brent crude prices, they have surged nearly more than 65 odd % right now in the last 7 trading session. Currently trading around the $119 per barrel mark, as against 70.7 that that we had seen a couple of days back. Now it is trading at the highest level since the Russia-Ukraine war had started, and on a YTD basis, crude prices have gained more than 80 odd %, which is the best start to the year that we have seen for crude oil prices, at least since 1997. Now, what will be the impact on the economy, given the fact that 85% of our crude requirement is imported? A $10 per barrel rise in the crude oil prices widens our current account deficit by anywhere between 0.4 to 0.5% of the GDP. When it comes to the inflation, it increases the CPI number by around 30 to 50 basis points and WPI number by around 80 basis points. Now, this completely depends on how much of this is passed on to consumers. And when it comes to GDP, the growth can come down by at least 15 basis points as per analysts, but that will again depend on how much of this is passed on to the consumers. Now, when it comes to the companies and sectors, oil marketing companies like IOCL, BPCL and HPCL, a rise in crude oil prices will impact the marketing margins. With increasing crude oil prices, the marketing margin goes down. Earlier it was at negative 20%. Right now, with this increasing crude oil prices, will further fall for the oil marketing companies, and every 0.5 rupees per litre change in the marketing margin lowers the EBITDA of IOCL, BPCL and HPCL by anywhere between 7 to 11 odd %. Now, apart from that, if you look at other sectors like aviation, paints, for both of them, 40% of the raw material cost is either fuel or crude derivative, and with increasing crude oil prices, their margins is also expected to get impacted. For lubricant manufacturers like Gulf Oil and Castrol, nearly 50% of the raw material is either crude or crude derivative, and their margins will also get impacted if this is not passed on to consumers. For tire companies, synthetic rubber, carbon black and various other chemicals, all prices of all these things are derivatives of crude, and with rising crude prices, the prices of these raw material will also increase. For cement companies, nearly 40 to 50% of the raw material basket is either directly or indirectly related to crude, and this will also impact their margins. For a host of specialty chemicals, it is negative because crude derivatives are part of the raw material, and they could also get impacted. On the positive side, but this is positive as long as the government does not impose windfall tax. Now, for ONGC, Oil India, Vedanta and HOEC, higher crude oil prices means higher realization, and higher realization means higher earnings. With every $5 per barrel rise in Brent crude prices, ONGC and Oil India's EPS increases by anywhere between 7 to 12%. But again, this completely depends on till the time the government doesn't impose any windfall tax.
All right, Somit, thanks so much for giving us all the perspective on the impact of crude oil prices. With that, out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thanks so much.
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
इट्स ओके यार
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit market pit with all the action in the market today. The action is absolutely overwhelming, I would say, Sharad, for investors, traders as well, because the kind of cuts that are coming in, I don't think so there's anything which is trading in the positive, apart from a couple of sectors that we will talk about during the show as well. But this is something which is concerning right now.
Yes, that's true. Good afternoon, Hiral. And it's a sea of red. It's an absolute carnage in the markets. Though, look at the Nifty's gap down. There was a massive gap down, a very mild recovery attempt, but it's not convincing. The story remains the same. And however, if you look at Nifty Bank, the technical chart is much weaker than Nifty also. Of course, there are some news flows also impacting that. We'll get you that in our show as well. But let's look at the key triggers for it. Of course, if you're a trader, best to avoid the markets. Long-term investor, maybe buy the dip. That's what the analysts and the dealers are talking about. But let's look at the key triggers right now, how the market is placed. The first one, of course, is the Nifty index. If you could just show that, where largely Nifty has hit its 10-month low levels, but a minor mild recovery is happening for the Nifty. Also, apart from this Nifty bank, if you talk about it, the 200 DMA levels, that is being tested. That's a very important level actually to talk about, and this is what we are talking about, and this is down almost 3.6%. Another key factor to look out in today's big sell-off is largely crude is off its highs. It touched almost 118, now it's around 109 per barrel on the reports of G7 intervention. But let's see how much it will be volatile in the day's trade. But nevertheless, remember the entire market sentiment is on the negative side. Advanced decline ratio 1:9. So broader market, massive sell-off is happening. Also, let's pull out the other key trigger which you should be focusing on. Recovery minor coming in from the IT segment, but all the other sectors are bleeding. More than 1% of downtick coming in most of these sectors. But there are two sectors which are bucking the trend. Sugar and oil exploration stocks, that is where the minor recoveries are definitely happening, and a very few small cap companies on the news flows are jumping, but it's a sea of red in the day's session as well. But the concern definitely is India VIX. That's up 19%. It's near that 24 levels you're talking about, and the rupee hitting its fresh record lows in the day's trade as well, and that's also a big concern. And overall, Hiral, the risk of sentiment is seen across all the asset classes, and now we are moving towards the oversold position as well. So this is the entire picture. Nevertheless, it's a bloodbath in the markets.
Absolutely, a bloodbath in the markets is what you are eyeing right now. But amid this volatility, you have Gautam Shah, founder of Goldilocks Global Research, who's turning bullish in terms of small cap and micro cap stocks. The reason why I've picked up this bite of the conversation is because it provides some bit of respite, some bit of positiveness as well to investors. Let's listen into his top sectoral picks.
I don't think this is the time to loosen positions, and get panicky, because I think a large part of the downtrend has already played out. The Nifty is correcting today. Mind you, the micro cap index and the small cap index have been in a bear market for the last 15 months. So I think if at all you want to buy something today for the next 2 to 3 years, go buy a basket of quality small caps and quality micro caps. I think that's where the opportunity is, not in the top 100 and 200, which has only now come under pressure. But the three spaces where I think one can hide, and I think that's been my view for a while now. Number one, metals. I think the entire metal space will continue to outperform. Till last week, the metals index was near a lifetime high. That's enough testimony of outperformance, and I think it's going to get better, both the ferrous and the non-ferrous side. Secondly, the entire PSC basket, where I think there is a lot of value with the dividend yield kicking in, nothing to do with foreign policy, and government stance very clear, very good technical ratio charts as well. So that's one space that I like, and selective healthcare names. So I think this is the third basket that we like. Apart from these three, I think everything looks quite negative.
Everything else looks negative. These are the pockets where Gautam Shah is betting big on. But moving on, let's quickly look at the watch list. OMC is now, Brent crude is above that $100 per barrel mark, currently hovering at around $105 per barrel. You have exploratory, OMCs which are under pressure on the back of the same news. Drilling companies like Jindal Drilling, Deep Industries, explorers are the ones which are seeing a rally in trade today. Now, it's becoming positive for sugar companies as well, because your global sugar prices have actually rebounded. It's providing some bit of fillip in terms of where ethanol pricing goes. So that stock, that segment is also in focus in today's session. Maharashtra has gone ahead and given a farm loan waiver, and that's somewhere what is putting pressure in terms of banking counters. The highest exposure to Middle East in terms of KC International. We spoke to the management, that stock is in focus, and Asami Hotels is acquiring 70% stake in Rare India. Now, this is a very strategic acquisition that we're talking about, and hence a very positive development is the way we are looking at it. Mahima will get us more details. Ramki Infra on the back of an order win boost, and IT stocks on the back of positive brokerage views that are coming in. So that's the watch list that we're looking at in today's session as we speak. But let's also get in Gaurang Shah, Senior Vice President at Geojit Financial Services. Gaurang, welcome to the show. Always a pleasure to speak to you. My question to you is, should you be catching the falling knife? Is that something that one should be watching out for? And if so, which falling knife would you advise someone should catch?
There are multiple of them falling right across and very difficult to avoid. Hiral, thank you so much for having me on the show. Good afternoon to all the viewers of NDTV Profit and to you and your entire team. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Hiral, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Jyojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might hold their investment interest. So, look, Hiral, this is not the first time that the Indian markets or global markets are witnessing this kind of a situation. We have witnessed this in the past. This situation is a little bit different because a country called Iran has got hit by joint allies, US and Israel. And yesterday's aggression was absolutely not required when they hit the desalination facility in Iran and they hit the biggest refinery in Iran. And that's one of the reasons why you've seen the crude oil prices burn. On the other side, the most important sea passage, Strait of Hormuz, is now under siege, lockdown, or absolutely restricted in terms of movements, and there is no global supply coming in terms of natural resources, either crude oil or LPG. So you are looking at a situation which is evolving every day, every hour, and we have to react to it. Having said that, to answer your question, whether you will catch the falling knife, well, I don't look at it as a falling knife. I look at it as an opportunity. And I'm being very honest and I'm giving a blanket disclosure to all your viewers and investors that I have not stopped my SIPs. My SIPs continued during COVID time. My SIPs continued during Russia, Ukraine. My SIPs continued during Iran, Hamas, whatever it is, and my SIPs are continuing now. It will continue in the future also. So don't stop your SIPs is my humble request. If you are having a little bit of elevated courage, if you have liquidity, if you want to do a lump sum investments, you can do that also. But don't stop your investment is something that I would say. This situation, we don't know when, how, which form, and which date it will get over. But definitely it will get over. And when we see that, then the markets are going to possibly turn around and it will give you. And historically speaking, Hiral, whenever these kind of situations have resolved or there is some kind of a positive news flow, markets have turned around quite smartly. So what are the pockets initially? Well, I think banking and finance, IT, pharma, healthcare, to a certain extent, power generating companies like Tata Power and TPC, because they are not directly related to that. In pharma, I would also add healthcare, that is hospitals and diagnostic, defense. These are the primary sectors to look at. If you are having an elevated risk appetite and if you want to take a contra call, then I think all those sectors which are as of now directly getting impacted because of the rising crude oil prices cannot be ignored. Maybe in small steps you can look over there as well.
Right, that's a very important commentary coming in from Gaurang, and especially do not stop your SIPs. But moving on, the sugar sector, that has bucked the trend in the day's trade. And of course, the higher crude prices means higher ethanol diversion chances are there. And because of that, the global pricing and the Indian export sugar prices have come into the parity. And that's why we are seeing the sugar stocks buzzing in trade and are on the positive side as well. Gaurang, good afternoon. Sharad here. I wanted to take your views on the sugar sector as a whole. Is it a tactical bet right now, seeing a good up move coming in the stocks itself, or would you like to stay away from the sector?
Sharad, I'm sorry, I couldn't hear you. Your audio had gone blank. Can you please repeat your question?
I'm talking about the sugar sector. There is a tactical bounce happening because of the global price rise in the sugar also. Your views on this sector?
The biggest problem is, Sharad, of course, let me give a disclosure. We had a coverage on a company called Balrampur Chini. Targets were in place, then we have taken the coverage off. Currently, we don't have coverage on any of the sugar companies or ethanol manufacturing. The reason being, Sharad, is that despite of all these, tailwind positivities, it is a sector which has got a lot of government control, let's say, policy-wise. Blending of ethanol capability, capacity was to be at a higher level, but unfortunately, the oil marketing companies have not reached that. They have gone up, but it's not to the level that they go. The third is the prices of ethanol. And the fourth is in terms of short-term news flows. So while the sector is right now breathing a sign of relief and is holding out in the green, durability is something that I have a big question mark on this particular sector because of the government policies and intervention.
Okay, so that's with regards to sugar companies. In fact, last couple of sessions have been very strong where sugar companies have been bucking the trend. How long the survival lasts is the key question that comes up. But moving on, let's quickly look at what's happening in terms of Google trends, because a lot of companies that keep trending on Google, and that's what we will show you right now. Few could be fundamental discussion points. Cupid is the one which is down in trade today. I mean, it's looking like there's a corporate action on that one, 77% downtick. HDFC Bank, Reliance Power, HPCL, as well as Jupiter Wagons, these are the ones. I mean, there's no question, even if it's good news, the stocks are under pressure today. Very few are surviving. Let me take a quick question with Gaurang in terms of HDFC Bank. Gaurang, how are you looking at a HDFC Bank? Would you say a bank like HDFC, a bank like ICICI, these could be opportunities that you should use to actually accumulate?
So I think the entire banking sector looks quite attractive, to be very honest. I would not be biased towards only private sector bank. I would rather say that have few strong public sector banks, have a few strong private sector banks, and along with that, you'll have strong NBFCs also in your portfolio. And I would also go to the length to say that I would rather suggest to all your viewers and investors that if you're investing in equity market and you do have a portfolio, then some small portion should be dedicated towards the banking and finance. There are difficult times because of inflation. Maybe there might be a pause by the MPC on the interest rate cuts, advice that was given to the Honorable Governor, RBI Governor, but that's a futuristic thing to see. So specifically speaking on HDFC Bank, to answer your question, yes, we have a fundamental coverage. And I think in terms of valuation, where it is trading right now, somewhere close to about 830, 835, 840, your downside as of now looks to be extremely, extremely limited and restricted.
Downside extremely limited when you talk about HDFC Bank as well. But moving on, in a corporate exclusive, NDTV Profit learns that Bandhan Bank is on the block. What does this mean? Nisha Podar gets us the exclusive story. Nisha, what are you picking for us?
Thanks so much, Hiral, for that. Yes, at least two independent sources who have the knowledge of developments at Bandhan Bank have shared with NDTV Profit that the bank is on the block. What we do gather from sources with direct knowledge is that there is a change of control that is being explored at Bandhan Bank currently, and there have been some work or some processes that have been kick-started by the bank and the promoter group entities in order to also kickstart a sale process to look at a viable suitor for buying out this particular bank. And this particular process will be through an investment banker being appointed, and they have open chats with several of the investment banking community advisors in order to kickstart the sale process. Now, there are two aspects which sources with direct knowledge have also shared with us. There are the strategic banks as a community which could be looking at Bandhan Bank as an attractive opportunity to merge itself with this particular bank, and that will be on account of, remember, the huge priority sector lending that this particular bank brings with itself, and also the large deposit base it has in eastern part of India. So these are the two aspects which could find it to be attractive for the strategic banks. But on the other hand, remember, the private equity players have also been very keenly looking at any opportunity to invest in banks, and that is because a universal bank being available as an investment destination is also rare. So these are the two pockets as suitors that could be looked at. At the moment, we do gather that there is some talk internally as well as externally to really kickstart the process to explore this particular option, and that is primarily on account of the microfinance business which has been ailing this particular sector, and a difficult cycle, that is coming to an end, and the bank is just about coming out of that. And the last quarter's results also gave enough opportunity for the brokerages to have a much improved view on this particular bank, and also upgraded the stock. So therefore, this could be one of the trigger points for taking such a big call by the company. Remember, promoter and promoter entities hold about 40% stake in the bank. When I reached out to the bank, they said that we are not aware of any such development by the promoters. And on the other hand, the promoter entities have not yet commented on our queries sent to them.
Thanks a lot for that, Nisha. Interesting development coming in Bandhan Bank, change of promoters. That's a story coming in from Nisha. But Gaurang, also wanted to get your view on the company as well, because the fundamentals last 2 to 3 odd years were not that good when it comes to Bandhan Bank's numbers. If there is a change of guard here, if a private equity comes in, will this change the fortunes of the company? We have seen a little bit of that run up in Shriram Finance, but your views on Bandhan Bank?
So it happened with Yes Bank also, right, Sharad? But not much has happened, to be very honest. Shriram Finance is a different company altogether. Look, with Bandhan Bank, as Nisha was mentioning, the problem has been the portfolio and the elevated levels of gross net NP and the provisioning. And before that, the earlier promoter had to go. A new gentleman was brought in at the helm of the bank. And now this developing story. As a disclosure, we do have a hold recommendation on Bandhan Bank, and I think we'll be cleanly watching the news development with respect to change in promoters and at what valuation it happens as and when it happens. Will it change the fortune of the bank? Well, it all depends upon who comes in and what is the business strategy, Sharad. So it's very difficult to make any kind of preemptive judgment on that. But I will remain optimistic that yes, if there is any change, that will be for better. But that only time can tell.
So we'll wait and watch as to what are the further developments that do come in. But a crude surge and the kind of impact we are seeing is interesting. Brent crude is up 54% in the last 7 sessions, trading around that $105 per barrel mark right now. It's actually inched higher from $70. It's trading at the highest level since July 2022. And if you talk about this, the impact on oil remains the key source of energy. 85% of India's oil consumption needs are being met through imports. And this is something which is impacting OMCs in trade. And that's the reason why names like HPCL, BPCL have been trading under pressure. But to add to this, what happens is your oil exploration companies are the ones which are in focus, and they are seeing a good reaction. Let me head across to my colleague Somit, who will break this up for us as to why this is positive and which are the exploration companies that benefit as well. Somit, over to you.
Well, smaller oil exploration companies like HOEC and Antelope Salan are gaining in trade on the back of higher crude prices. But apart from that, there is drilling companies like Jindal Drilling and Deep Industries, which have also seen a favorable trend with rising crude oil prices. So crude oil prices, if you look at on an intraday basis, it has gained nearly 29%. It has been quite volatile right now, but on an intraday basis, it gained close to 29%. It has been gaining for the last 7th consecutive session, and it's at its highest level since 2022. That's when the Russia-Ukraine war started, and since then we are seeing this higher level coming in for crude oil prices. So how does it benefit oil explorers like HOEC and Antelope Salan? Higher oil prices lead to higher realization, and higher realization means higher earnings for these companies going forward. But for oil drillers, it is largely a sentimental impact. For Jindal Drilling and Deep Industries, usually higher crude oil prices lead to improved drilling activities, and improved drilling activities lead to higher offshore rig rates. But it clearly depends on how many rigs are coming for renewable, because these rigs will only benefit from the higher rates going forward. So it is largely a sentimental impact. Financially, it's very difficult to ascertain at this moment how much Jindal Drilling or Deep Industries would benefit out of this. Now, when it comes to HOEC, it has multiple oil fields in Northeast India, so higher realization will benefit them. Same for Antelope Salan, it has 9 oil fields across offshore Mumbai and Mahanadi. For Jindal Drilling, it has offshore jackup rigs. 3 of them are owned, while 3 of them are rented, and only 1 of them is coming up for renewal. So that rig could see benefits of higher rates going forward. For Deep Industries, it has around 18 operating rigs, and all are onshore rigs deployed in Gujarat, Tripura, Assam, Andhra Pradesh and in Jharkhand. 2 other rigs will be deployed by the end of FY26. So these 2 rigs might see the benefit of higher rigs, but not all of them will see the benefit of higher rig rates going forward.
Okay, thank you so much for that, Somit. Puts a lot of things into perspective. Gaurang, quick view, OMCs versus your oil exploration companies.
Well, short term, it's negative for oil marketing companies, positive for oil exploration companies. In oil exploration, positive on ONGC GAIL. In oil marketing companies, positive on all 3, HPCL, BPCL, IOC, including a company which is a private sector company which is into exploration and oil marketing, that is the Reliance Industries.
So that's the view coming in. Now moving on to another NDTV Profit exclusive. Rishabh Bhatnagar has picked up that the government is cracking down on profiteering by shipping lines, ports, and this is amid the war disruptions that we have been seeing. Let me head across to Rishabh to tell us more. Rishabh, what are you picking up from your sources? Because this is a time where everyone has to be calm and quiet, and there you talk about shipping lines which are profiteering.
Absolutely. There was a lot of chatter and the government had also asked a lot of shipping lines and port authorities to actually work in national interests over commercial interests. This is a story we broke about a couple of days back. But again, more on that front, what we have and what we can expect later in the evening is a formal set of guidelines or an advisory that will be put out by the Director General of Shipping. And it will essentially be invoking the clauses that the government already has in the Merchant Shipping Act with respect to anti-profiteering, with respect to rigging of prices, as well as collusion, as well as the unnecessary escalatory pricing that we're seeing exporters being burdened with in an already very uncertain environment. What we're picking up from the meeting that has just concluded between exporters and the Director General of Shipping is the fact that there were a lot of complaints of steep as well as ad hoc surcharges in the form of emergency conflict surcharges being burdened on these exporters. These are anywhere between $1,500 to $4,000 per container. And that is a lot of money. That is in fact, a lot higher than the actual freight rate in some cases. And that is what exporters have flagged to the government. What the government is saying is that there's already provisions in the laws, in the existing laws to prevent this, and they will be issuing a formal advisory to shipping lines to formalize this.
All right. Thanks a lot, Rishabh, for this interesting development coming in. But the PSU banking space is also in focus. Interestingly, Maharashtra government has announced farm loan waiver for the farmers. Roughly, it's a 2 lakh rupees farm waiver coming in. But what brokerages have to say is very, you could say, mixed. Macquarie has stated that this development is negative in their view, and especially the PSU banks, that is where they will be impacted more than the private banking space. And they are expecting that the HDFC Bank's agri NPL, that's around 3.8% in FY25 as compared to SBI's 3.4%. Also, Equirus also has come out with its reports, but they have a slight positive bent towards this. They have stated that, of course, these NPA ratios, which have actually improved over the next 1 year after these announcements. And overall, the scheme benefits are for the existing overdue borrowers, and likely SBI and Bank of India would be the key beneficiaries going ahead. Final thoughts, Gaurang, on this banking space, on this Maharashtra loan waiver news flow which has come in. Any kind of views for the PSU banks?
I think it will be a stopgap treatment. This is the third time, I believe, in the last decade that these kind of steps have been taken by the government. For reason best known to their interest and their wisdom. I don't want to go into those details because I'm not a party to it. But honestly speaking, maybe it might have a knee-jerk reaction. But like I was speaking with Hiral, banks are something that we are extremely positive on, both private, public, as well as non-banking finance companies.
Right, so that BFSI space is something which Gaurang is positive on. Thanks a lot, Gaurang. Always a pleasure talking to you. We are out of time now. And that's all, folks, for Trending Stocks from me, Hiral, and the entire team who has put this show. Stay tuned to NDTV Profit. Up next, we have Markets Lunch.
Just
success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
It's a bloodbath on the Dalal Street, with jittery investors ducking for safer havens amid escalating geopolitical uncertainty and surging oil prices. The global sell-off reflects on Nifty, which is trading just above 23,800. Sensex as well crashed almost 2,000 points to trade near 77,000 as well. And oil marketing companies under pressure as crude tops $100 per barrel and above. This comes amid a series of production cuts as well from major Middle Eastern producers following disruptions in the Strait of Hormuz. All sectoral indices trade in the negative territory with autos and public sector banks hit the most, metals lose all shine, energy stocks and realty lag in trade. Rupee fell to a historic low, breaching the psychologically significant 92 per dollar mark amid escalating geopolitical tensions and energy crisis. Good afternoon. You're tuned in to Lunchtime Trades. Thank you so much for staying tuned in. This is the show that, of course, gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's quickly take a look at the markets first things first, because it's actually a carnage that you're looking at, whether you talk about Nifty or Sensex. So Nifty, a cut of about 500 odd points is what you're seeing right now. When you talk about Sensex as well, it's a gash, that cut really, because you're looking at about a 1,700 point slide also coming in for the Sensex. When you talk about the list of losers, it's actually a very longer list on the sectoral front. In fact, most of your sectoral indices right now holding on to a tinge of red right now as we speak. So PSU banks leading that particular decline, autos, banks, defense, oil and gas, even metals, consumption, some of your energy names as well, and FMCG, realty and pharma, exactly in that order. Those are your top sectoral laggards, and there's only laggards in the market when you talk about sectors as well. When you talk about stocks as well, you're looking at a similar picture coming in, something like a 5.5% cut coming in for Tata Motors, PV, M&M as well. Downtick of about 5.5% coming in. SBI also down about 5.5%. Quality Walls on the back of that weak set of numbers. When you talk about the quarter-on-quarter basis, losses widened on the back of that, about a 6% cut coming in for that particular counter as well. Interglobe Aviations, there's chatter around ATF hike. That is weighing heavily on the stock as well, about a 4% cut coming in on that particular counter. But when you talk about the list of stocks that are remaining resilient, just heavyweight Reliance from within the Nifty 50 pack, and Wipro managing to hold on to just a tinge of green, as you can see on your screens as well. So that's largely the kind of setup that you have as far as sectors are also concerned, and some of your stocks are also concerned. But with that in mind, the top story at this hour, of course, is crude oil prices surging above that $100 per barrel mark, with the war also impacting the world's oil artery. The Strait of Hormuz, which are the sectors really that stand to get impacted at this point in time? What does the math of this particular impact also look like? In fact, Hiral is joining in with just that answer.
Thank you so much for that. In fact, it's very interesting to see what's happening with crude. Now, Brent crude is up nearly 54% in the last 7 trading sessions. And now it's hovering around that $105 per barrel mark, up actually from that $70 to $71 per barrel mark. Now, this is the highest level that crude has seen since July 2022. And on a YTD basis, we are seeing an uptick of around 79%. Now, if you talk about the impact, let's look at India. Oil has remained the key source of energy when it comes to the Indian markets, and 85% of India's oil consumption, the needs are met through imports. Now, India's oil intensity has actually declined rapidly, and this has happened over the past few years, and that's what we've been seeing. In fact, the other impact when it comes to inflation is a 10% rise in crude prices could actually impact or increase the headline CPI or the WPI by nearly 40 to 80 basis points respectively. This is the inflation that I'm talking about over here. When you talk about the current account deficit as well, a 10% increase in terms of oil prices would actually widen the current account deficit by nearly 30 basis points. So that's the kind of impact that you will have to calculate. And in terms of OMCs, this becomes absolutely negative for OMCs because the marketing margins get impacted negatively. There is a crunch that they see in terms of margins, plus you will see lower marketing margins as well. And every 0.5 rupee per litre change in fuel margins obviously impacts the EBITDA margins as well. So that's the impact that you're seeing in terms of OMCs, and that's the reason why they are trading under pressure. Apart from that, it'll be negative for paint companies as well, because 40% of the raw material cost of paint companies comes in from crude derivatives. So that's the impact you would see in terms of margins coming in there. You will see an impact on lubricant manufacturers as well. Negative, as 50% of the raw material for lubricant manufacturers is from crude derivatives. Negative for tire companies, a similar situation there, because synthetic rubber and carbon black and chemicals form 40% of the raw material for tire companies as well. and for cement companies where 40 to 50% of the cost directly or indirectly is linked to crude. Specialty chemicals as well, you will see a negative impact coming in there because the key raw material for specialty chemicals is linked to crude for many of the companies. The only way where it is positive is for oil exploratory companies, ONGC, Oil India, Vedanta and HOEC. In fact, higher crude prices actually mean higher realizations for HOEs, for the exploratory companies, and they're positive on the back of earnings as well. An EPS uptick could happen for a ONGC, for a Oil India, and short-term fluctuations don't tend to have a major impact. So if this lasts longer, you will see that positive impact coming in terms of financials as well, and not only the stock price.
No, absolutely. And thanks, Hiral, for getting us that entire lowdown when it comes to the impact. That's important to note right now. But when you talk about prices as well, let's get your picture in terms of the prices as well. Take a look at the levels that we're currently looking at. When it comes to Brent and WTI, of course, when you talk about factors, you're looking at a bunch of factors in terms of more major Middle East producers as well, curbing production, severe disruptions that you're looking at in the Strait of Hormuz. And that's also something that is really ailing prices. You do have attacks on key energy infrastructure as well, driving those supply worries. And Saudi, in fact, has intercepted some of your drones heading to 1 million barrel a day refinery oil field as well. And that is also something that is another trigger also coming in. Just to give you a sense of the magnitude of this, JP Morgan, in fact, is also penciling in that this Middle East production shut-in, it could be amounting to the tune of somewhere close to 4 million barrels per day by the next week itself. So that's something that you're looking at in terms of this supply disruption. We'll keep getting you a better picture when it comes to the levels as well. But as we do that, let's also connect with Pratmesh Malia, analyst, non-agri commodities and currencies Angel One, who's joining us to give us some more insight when it comes to this. Mr. Malia, it is a good day to be talking to you because there's actually a bunch of things that we can manage to cover in this conversation right now. A lot of headlines that you're looking at. Supply concerns, I presume, make it to the top of your radar when you talk about crude prices?
I think this is the first time that the Strait of Hormuz has been shut down in the history of oil markets. So yes, the risk premium, geopolitical risk, everything had to be captured in, and that's the reason you have seen almost 54% move in past 1 week. And the risk premium is going to rise again because almost 20% of global oil supply is at risk. The transit is not happening. So I would not rule out again Brent towards $130, $140 per barrel mark. That situation cannot be ruled out, and it is a chaos, specifically for oil markets.
And that's something that you're looking at. I also wanted to get a sense of what you think in terms of the impact going forward. Of course, this is likely to be a prolonged conflict. At least that's the picture that you're picking up right now when it comes to commentary coming in from leaders and other indicators. So given all of that, what are the kind of targets that you have in mind for the near term? What are the levels that you're looking at also?
I think as far as WTI crude is concerned, I think a risk premium of around $10 to $15 cannot be rolled out immediately within next week itself. So specifically, if you want an exact number, it would somewhere be around 110 to 115 as far as WTI crude is concerned. And if you translate it to Indian markets, I think a move of close to around 11,200 rupees on the MCX is what you can probably see if the escalation further happens. Unless all the parties come to the negotiating table, I think the risk premium would further add on and the momentum would further shift to the higher side. So specifically targeted price 115 as far as WTI oil is concerned.
Absolutely, and the kind of commentary that we're getting in, at least as far as brokerages are concerned, or just in general, the indication that you're getting is that these production shut-ins from here on are actually going to be worsening, especially heading into the next week. Given all of that, when you talk about price levels or when you talk about technical indicators, you do have the prompt spread also widening. That entire potpourri of things, that entire confluence of factors that you have right now, do you think that the crude prices in the next 3 months can really be challenging the kind of perception that we've had thus far heading into this year? Of course, there wasn't a war that we had, right?
If there wasn't a war, crude oil markets were very well supplied. So the escalation of prices and the risk premium at present is purely out of war situation. So if the situation eases, we would see oil prices back to normal levels. But until and unless the situation normalizes, I would see crude oil prices gaining further momentum in the next week. And I don't know when it will stop because it is an event risk.
Absolutely, it is an event risk, and the headlines are just unfolding by the hour, Mr. Malia. But when you talk about gold as well, I wanted to shift your attention to that as well, because there's a couple of factors that right now you're looking at least in this market. Of course, the oil story is very much into play there as well, and that's also something that investors are looking at. But when you talk about gold broadly, you do have a stronger dollar and also indications of a stronger dollar heading into this week. Other than that, there's also higher likelihood when you talk about interest rate cuts as well. Is that something that you're seeing in terms of factors for this decline, or is there anything else that you'll be attributing it to?
I think in general, stronger dollar and commodities are inversely correlated. Given the geopolitical situation, which is out of hand, in an ideal scenario, gold and silver would have gained further momentum. But then these are technical resistance zones, probably where gold and silver both are correcting for the past couple of trading sessions. I think if this further escalates and if there is further news flow from any of these areas wherein the war is escalating, I think you would see momentum in gold prices moving higher. At least a risk premium of $100-$120 cannot be ruled out for gold prices, while if it goes to silver, a risk premium of close to around $10 cannot be ruled out. On the MCX, if you're asking for just for a couple of days, I think 1,60,000 on the downside and 1,58,000 are two support zones for gold, while as far as silver is concerned, 2,62,000 and 2,60,000 are two probable downside zones wherein you can see gold and silver both commodities correction in a couple of days.
Well, absolutely. And before we let you go, I quickly wanted to get a sense of what kind of advice do you have, what kind of words of wisdom do you have for investors who are currently holding on to gold as well as silver, be it in the physical market or through ETFs, because there's a tale of two triggers that you have right now. On one side, you have safe haven demand. On the other side, a stronger greenback as well, making things a little more complicated when you talk about both of these metals. So given that entire backdrop, should investors stay on the sidelines for a bit, wait for the volatility to subside?
I think irrespective of whether it is volatility or no volatility, gold and silver should be a part of your portfolio. So if you probably missed the momentum and the rally, I would say don't try to time this markets, because you will get it wrong every other time. Every price that you see would be an accumulation point, and if there is correction, it gives further opportunity for investors to probably value average your earlier high prices, and you can accumulate gold and silver consistently over a period of time if you are a long-term player in this particular commodities.
Absolutely. And in terms of broadly the kind of picture that you have, do you think that safe haven demand can really topple the entire worry on the back of a stronger dollar as well right now, given things as they stand? Because you do have an escalation in the war on one side.
It would be silver. And just to give a disclaimer, whatever strategies we have discussed, I do not have any individual positions in this particular commodities, but my organization clients would have positions in some of these strategies given.
No, absolutely. I also wanted to get a sense of what you think about copper as well going forward, because there's been a confluence of factors that you're looking at when you talk about copper, and things are starting to look a little more interesting, a little more complex when you talk about the entire metals complex, with this entire dynamic of the war also being factored in. So what is your outlook when it comes to copper then?
I think copper is one commodity which has taken a backseat in all these escalation points. So I think we'll have to wait and watch until the dust settles down, and probably wait for the demand side to catch up for specifically for base metals and copper. But for the time being, I think correction in copper would be the role play, and 1170 and 1160 are the downside targets as far as copper is concerned on the MCX.
Alright, then thank you so much for helping us with that outlook also coming in. As far as copper is also concerned, we've managed to cover quite a few metals as well as oil prices. Thank you so much for joining in. So there you go. That's the entire pecking order as well that makes it to his radar. So oil number 1, number 2 is silver in terms of Mr. Malia's list, and then gold. That's the entire pecking order that he also has. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
Stage that brings together India's most compelling creative voices.
NDTV का creator मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देख पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया। It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th, 15th March, Sundar Nursery, New Delhi. New Year. New Power Panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to get your corporate exclusive. In fact, NDTV Profit learns that Bandhan Bank is on the block. In fact, Nisha Podar is standing by with just that story.
Yes, thanks for that. So at least 2 independent sources with direct knowledge of the development at Bandhan Bank have shared with NDTV Profit that the promoter group is looking at a change of control or exiting the bank. That means that the bank will be impacted by way of a change in control, which is being explored at the current moment, is what I gather. Sources also do say that a process to really appoint an investment bank to take forward the sale process is also in the works, and that particular process has already been initiated. Once the investment banker is confirmed, then the sale process can be kick-started. Now, there are 2 important pockets of suitors that could be really attracted to this kind of an asset, a universal bank, Bandhan Bank, and especially with a large MFI portfolio. And also remember, it has the deposit-taking ability and a huge amount of deposits spanning in the eastern part of India. These are some of the points which could be really attractive for any other strategic bank to really merge Bandhan Bank with itself, and that could be a deal also that could be really envisaged over here. Also remember that MFI is into the priority sector lending, and a profitable one at that, which could be an attractive proposition for any other large bank. Apart from that, remember that the private equity players and investors have always been attracted towards universal bank opportunities for investments, and there are very few available. So this could be an attractive proposition for them. When we spoke to the bank said that we are not aware of any such decision. We did reach out to the promoter group and the entities there. We haven't got any details or any comment coming in from there, but Bandhan Bank needs to be watched out for, as we gather from sources with direct knowledge, that's going to be on the block.
No, absolutely. And the stock also trading with a cut of about 5% as we speak as well. Thank you so much, Nisha, for getting us all of those details. Moving on then, the government's assured adequate raw material to Construction Federation as companies seek force majeure as well. In fact, Nimit Dixit is joining in with all of those exclusive details.
Absolutely. So the NHAI has met with the Highway Builders Federation this weekend, and they've assured that they have adequate facility of raw materials, cement, bitumen, as well as oil, and they will not go up. As of now, they're assuring them that you have enough. Even as these construction companies are actually seeking to invoke force majeure, which waives their obligations under their contracts because of all the disruptions that are happening. Sources say that there's a lot of shipping, because of the shipping disruption, there's a lot of disruption in the truck movement, and raw material is not able to reach certain toll plazas for highway construction. And therein, the Highway Builders Association is in active conversation with the NHAI on this. The price of bitumen, which is an important ingredient, has gone up by about 2,000 rupees per ton. It's averaged at around 50,000, so that's a significant rise. So far, there is no hike in diesel, which means the hike in cement is also unclear. Another meeting for the rise of bitumen is to happen on the 15th of March, and we'll have more details then. But as of now, the ministry, the NHAI, has assured these companies that they have adequate supply for the coming season.
And thank you so much, Nimit, for joining us with that update also. So there you go. That's an entire exclusive also coming in when it comes to the demand here. But let's also move on, talk to you about Maharashtra CM Devendra Fadnavis also presenting the 2026 to 27 state budget. Now, he's announced a major farm loan waiver of up to 2 lakh rupees for farmers with arrears till September 2025. Now, the government's also earmarked 20,000 crore rupees to waive electricity bills for farmers using 7.5 HP pumps as well. In fact, Sujata is joining in with all of those highlights.
On March 6, while presenting the state budget, Maharashtra Chief Minister Devendra Fadnavis did a major credit cleansing by resetting the financial slate of the farmers of Maharashtra. A major announcement was made within which the loans which has been taken up by these farmers will be waived off. The name of the scheme has been kept after Punya Shlok Ahilya Devi Holkar Kisan Karz Maafi Yojana, within which almost 5,50,000 lakh farmers will be beneficiaries, and a total amount of 2 lakh rupee per farmer will be provided by the government as a waiver for their loans to be settled. Not only that, but the Chief Minister, while presenting the budget, also stated that the resilience of the farmers who have been paying their loans consistently, it will be rewarded, and by rewarding the resilient here, a 50,000 rupees incentive will be provided to the farmers who have been consistently paying their loans. And not only that, it is the government which promised that none of the farmers in Maharashtra will be facing financial crisis, and all of the assistance to them will be provided. The verification of these farmers will be done via their Aadhaar cards and by including them into the list. And not only that, in this specific budget, it was also AI in agriculture. How is it that it will be improved as well as involved in the plan was also announced, and henceforth this budget for Maharashtra as well as its farmers is very important. And at the same time, this particular Yojana which has been kept off is being stated as a major pre-poll promise which has been fulfilled by the Mahayuti government, which was earlier promised to the farmers that their loan amount will be waived off, and we could see that happening in this state budget which was presented by the Chief Minister himself this year.
All right, thank you so much for getting us all of those highlights. But with that, we're timed out on this edition of the show. Thank you so much for tuning in.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
first India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
You're watching Small Cap Buzzers here at NDTV Profit. I'm Mahima Vacharjani and we'll take you through the small caps that are buzzing today and that we have planned for you on the show today. Of course, the markets are clearly under pressure, but and the small cap index being further under pressure. But let's take a look at as to what we're going to discuss on the show, what all stocks that we're going to discuss on the show today. The first one is Mass Financial. We're going to speak to the management as to the company that has recently did its analyst meet, and the company aims to grow its AUM at a CAGR of 20 to 25%, has targeted an ROA of anywhere between that 2.75 to 3% and ROE of 15 to 17 odd percent. The second one that we're going to put spotlight on is our system. Now the company has gained as much as 13% in trade today. Now cooled off a tad bit, trading around 10% higher, but did touch an intraday high of that 13% mark, biggest move since August 2025. What is kind of leading to that growth and what is auguring that move in these markets, especially when we are seeing a bloodbath in the markets? The next one is Titan Biotech. Now this is an interesting one because it's gained for fourth consecutive session today, and it's it's been constantly gaining and has seen significant amount of gains, 44% in the last 4 trading sessions. Today also, it's seeing a gain of about 8%. So what's causing that rally is something that we're going to discuss, and how the financials fare for this particular counter as well. The other pack of stocks that we're going to talk about is HOEC, Antelopis, Celan, as well as Jindal Drilling and Deep Industries. Now, higher crude oil prices have led to a rally in all of these counters because they benefit from higher crude pricing, as essentially these are all into oil exploration and drilling. Brent crude did in fact jump as much as 29%, now cooled off a bit on an intraday high basis. Right now, trading anywhere in that $107 to $109 per barrel rate. So that's with regards to where everything that we're going to talk about in the show today. But let's take a quick look as to how the markets are doing. Well, clearly under pressure. I can understand if your portfolios are in the red today and bleeding. It's the sentiment as to how the market is faring. The Nifty 50 is down by about 2%, 550 odd points for downtake is what we're seeing. Slightly off from its day's low point, but still trading with cuts of over 2%. The Bank Nifty, and of course slightly now below the 23,900 levels for the Nifty 50. The Bank Nifty is also down by about almost 2,000 points, down 3.5%. Largely this is led by PSU banks, which is seeing a downtake of around 6%. 55,700 levels is what the Bank Nifty is testing right now. With regards to where the sectors go, let's try to quickly pull that out and see as to what sectors are doing. All sectors in the red is the kind of sentiment. Entire that heat map is painted in that red. PSU banks losing the most ground, followed by auto, bank, as well as your private banks also seeing a downtick of around 3%. But pharma, IT, FMCG, some counters that are losing ground slightly lesser than what the other indexes are doing. Let's quickly pull up some small caps name as well, the mid cap and the small cap index, before we do that, to see as to how the index is performing in terms of where the broader end of spectrum goes. You have the mid cap 150, which is cooled off from its day's low point, but trading around with a cuts of 2%, and the small cap 250 similarly trading with cuts of 2% as well. But some small cap names, you have Rain Industries, which is seeing a downtick of around 2%, Optimus, which is seeing a downtick of around 9%, Meghmani Organics down by about 8%, something like in Concord Enviro Systems is also down by about 7.9%. You have Supriya Life Sciences, which is also under pressure, down by about 7%. Dollar Industries also down 7%. You have counters like TVS Electricals, as well as counters like Nitco Pharma also down by about 6%. But on the flip side, even Delta Corp in fact is under pressure today. But on the flip side, counters that are doing fairly well, you have Apollo Pipes, which is doing which is seeing an uptick of around 15%. You have Orient Bell, which is also doing fairly well. Sesashai Electric Tech is also doing fairly well. You have counters like Jindal Photo. Some sugar counters, small sugar counters are also doing well in trade today. The entire pack, in fact, it has been doing well. Dhampur Sugar, Rana Sugar, etc. So that's with regards to where the markets go. But with that, let's also welcome in our guest for the day, Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi, joining us now. Narendra, a very good afternoon to you, and thank you so much for taking out the time. Your take on the markets right now, because every investor, every trader watching us out there wants to know as to what will happen next.
Yeah, good afternoon. Definitely the headwinds because of West Asia events have created a negativity, and a downward move has been there in our markets and global markets as well. I think short term is really volatile. As the things stands today, it is still very unclear when would the war stop and what kind of next actions both the parties are going to do. And the longer it goes, I think the longer the supply chain goes empty, and we would see impact gradually snowballing into various different industries. So definitely, I think the earlier this ends would be better for the overall economy as well as the markets, because ultimately the longer it goes, then it would gradually be impactful on the earnings as well. So right now, it is now we are into wait and watch situation, and looking at how things evolve as of now. However, from medium to long term perspective, this also provides good opportunities because the valuations are taken a hit significantly, and if you have funds which can be deployed for 3 years or 5 years, then it's again a perfect opportunity to go shopping good names which eventually would bounce back when this war gets over.
Fair. Narendra, your point being that if the fundamentals of the company are strong, then once the situation gets cooled off, those stocks are going to bounce back. So it's a good buying opportunity. But with that, as promised, let's welcome in Dhwanil Gandhi, who is the ED of Mass Financial Services, joining us now. Dhwanil, a very good afternoon to you, and thank you so much for taking out the time. My first question to you is with regards to the kind of guidance that you've given, the vision 2036 that you're aiming at, and you gave a guidance of AUM of roughly 1 trillion by that 2036. That means that you have to grow at a CAGR of 21%. Just wanted to understand as to firstly, what are the segments that will contribute to this AUM growth, one? And do you think that 21% CAGR is something that you'll be able to maintain annually to get to that 1 trillion mark?
Right. Thank you so much. Absolutely right. So I think we had the analyst meet at the beginning of the month. And at that point of time, we had given the call for 1 lakh crore AUM within next 10 years. And we feel that this is a very measured and a very achievable target based on the past performance that we have had. So albeit a smaller base, but we have grown the AUM at close to 35% plus over the last 30 odd years, and profitability at almost 38% over last 30 years of our vintage. So going forward, we feel that 20 to 25% growth and doubling every 3.5-4 years is something which is very much achievable considering the market size that India offers. In terms of segments, we are a multi-product company. So we are focused on MSME lending that forms around 75% of our book, wherein micro enterprise loans, SME loans are the two flagship products that we have. We also have the wheels finance business where we do two-wheeler commercial vehicle, and we also have a housing finance subsidiary where we do affordable housing finance. So going forward on the target of 1 lakh crore, we feel that MSME will still lead the pack. From the current 75%, maybe it can go down to closer to 65% weightage, and the other products will contribute slightly higher. So that's how we see the product mix going forward in terms of contribution towards the 1 lakh crore.
Understood. Dhwanil, still 65% of your book concentrated towards MSME and micro lending. Just want to understand that as in when your AUM grows, how do you plan to kind of make sure that your underwriting standards are not diluted? How will you ensure that?
So I think the core of the business is obviously how you can balance between good underwriting standards and growth as well. So that is something that we have done over the last 30 years. That is something that we have done in absence of data as well, where the level of formalization in terms of data and enterprises, MSME enterprises that we are seeing today was not there. And still we had our GNP and NNPAs under control. So going forward, we feel that the learnings of the past 30 years that we have had will play a big role, and as well the formalization and more data availability like GST data, banking data, and the payment data and all of those things. A combination of these things will help us to underwrite more efficiently, we feel, and we feel that we will not lose the core objective of extending credit where it is due, and also keep the growth at 20-25%.
Okay, got it. You in your analyst meet did mention that the SME space as a whole is more than 30 trillion in India, and that's the kind of gap that you want to capture, right? I wanted to understand that with this growth of AUM, I believe that your ticket size will also be growing. Along with that, how will you maintain your risk profile?
Right. So I think market size in MSME market size, the gap in India is anybody's guess. This is just one number from a study that we had referred to, but it is huge. I think for somebody like us who is a mid-size NBFC and growing at 20-25% market size is not going to be a challenge at all. So we feel that as the book size grows, as our risk appetite also increases, as the balance sheet size grows, we want to increase the ticket size gradually. Even if you look at the last 2 to 3 years trajectory in terms of ticket sizes across all our products, including MEL and SME, it has been on a growing trend. So we feel that from our current average ticket size of say 30 odd lakhs in the SME product, we feel that that could eventually go up to 40 or 50 lakhs also on a higher balance sheet size and higher AUM. So the idea is that as the balance sheet grows, we want to lend larger amounts and also balance the yields and the risk as well.
So Dhanil, the wheels finance that you're talking about, that could be the next growth of engine, right? And you did say that contribution coming in from there might increase going forward. But right now, if we take a look at the GNPA levels, as compared to the wheels finance versus your SME book, the wheels financing is higher. So want to understand as to how comfortable are you increasing this share in your portfolio aggressively, considering the GNPA number as well?
Right. So every product will have different yield metrics. As you rightly mentioned, the wheels portfolio is a product which is slightly more informal. The CV loans that we do or the two-wheeler loans, the underlying customers are slightly more informal in nature. But at the same time, we are able to get higher yields also on those products. If you look at the average yield comparison between SME and wheels average yield is higher. So we feel that as long as it meets our target of the desired ROA that we want to get, the desired return on asset that we want to get of anywhere between 3% and maybe slightly higher than that, we are okay to grow and grow that product segment. So we feel that only the higher GNPA to look at it in an isolated manner will not be the right way. But the complete yield matrix and the resultant ROA, if we are able to get that, we will focus on it. And pre-COVID, the book was not growing. We had ourselves limited the book growth because we did not find the situation conducive. Post-COVID, we found the situation conducive and we grew the wheels book. And we feel that going forward, the way the economy has to grow, the commercial vehicle industry, two-wheeler industry has to grow. So I think it can positively contribute to the overall growth that we are anticipating.
Got it. Dhanil, your cost of borrowing is trending towards that 9% mark, if I'm not wrong. How much scope do you think there is in terms of reduction in terms of where funding cost goes?
So last quarter, the cost of borrowing was roughly at around 9.5. Incremental borrowing, that the fresh borrowing that we are doing is at anywhere between 9.15 to 9.25%. And our borrowing cost is linked to the MCLR. We feel that this can settle at anywhere between 9% to 9.15% incrementally going forward. Now, let's hope that the global situation doesn't get too bad, that RBI rethinks on maybe a further 0.25 or 0.5% rate cut, or maybe the extreme scenario of maybe increasing it. We are hopeful that it doesn't turn to that. But if the status quo is maintained, we feel that our cost of borrowing can go at anywhere between 9% to 9.15%.
One quick question. You are using a lot of and adopting technology in a big way. Just want to understand that because of that, do you think your cost to income ratio can, further go down from that 36% mark?
We are in a growing phase. Whatever efficiencies that we will bring in from technologies in a way, maybe in terms of for whatever growth, whatever investment in infrastructure and manpower we will have to do, it might get set off. Our first target in the short term is to get the cost to income stable at this level. It has been on a growing trajectory, but backed by good growth and increase in profitability as well. But the idea is that we maintain it at this level, and hopefully the medium to long term view is that with technology this should slowly and gradually start coming down.
Dhanil, thank you so much for taking out the time and helping us answer all those questions so candidly.
So much.
All right. With that, Narendra, I'll quickly come to you on Mars Financials. What's the view like?
Yeah, we also have a positive view on the company. If you see the latest results, despite the challenging environment, the company has delivered a healthy AUM growth of about 18%, and it targets an AUM growth of around 20%, 21%. Plus, they are focusing on increasing this through raising the direct retail share. in their AUM. Plus, if you see the delinquencies, the early delinquencies are also stable, which is at about 2.5, 2.6%. So, which again, which is what the company has guided of maintaining it below 2.5%. And in valuation terms, also, it is now trading at about 1.5 times FY28 book value. So, from valuation perspective, also, the stock is attractively valued if you look at the overall growth scenario, high growth scenario, and even the NIMs, which are somewhere about 7%. So I think it's a good stock to bet for medium to long term.
All right, a good counter to keep your eye out for from a medium to long term perspective. Valuations also looking attractive and tall targets given by the management. But now it's time to take a look at the F&O space, and we have Sharad joining us to give us a perspective with regards to how the setup is looking like right now. Slight recovery is what we've seen, Sharad. Any change from where we spoke last time?
Yes, last time, Mahima, there was only one company in the Sensex which was in the green, and I think some IT names, okay, it's actually changed. Earlier, actually, Reliance was in the green, but now again the story remains the same. Now, Sun Pharma is the only, green. Rest all are red, but definitely a minor improvement definitely coming in. And Bankex, the structural setup is more bad. If you compare that with Sensex, HDFC Bank down 2.5%, Federal Bank 5%, Bank of Baroda, these numbers you generally don't see every day. But it seems like there is a big sell-off. In this market, is there any long build-up? Maybe yes. Let's just see what's there, and it's not convincing, but nevertheless, we'll take it. MCX, Avenue Supermarts, that's where a little bit of long build-up is happening, but nothing in short covering. Long unwinding, let's move there. How things are moving, and SAIL and PFC, they are still there. SAIL has moved into this earlier. PFC was there at 10:45 when we had mentioned shorts. So you pick up anything, most of them seeing massive short build up. Interestingly, PG Electroplast has come in. There's an interesting announcement coming in regarding the supply chain. So once these LPG numbers start coming down, it starts affecting the industry. So this is very much important. So these are the stocks should be in your radar. But yes, right now also it's a falling knife market. So stay aware and stay beware, especially for the traders.
Okay, very well summed up, Sharad, with regards to where the markets go. Narendra, I'm just wondering, any particular pocket or any particular sector that you're looking at right now actively as a buying opportunity, considering all of these are for, especially the banking space, because both the PSU banks and private banks have taken a hit today.
Yeah, definitely. Banking space is a sector wherein it promises an overall exposure to a broader economic growth. So banking is definitely a sector where you can go shopping for medium to long term. And right now would be favoring both the PSU as well as private banks like SBI's, Indian Bank, ICICI Bank, and the likes of these. Plus, I think defense is another sector. I think we should continue to remain in the limelight, both because of increasing capital expenditure, both as in terms of medium to long term defense needs, plus in the current environment, the favorability of the sector always remain. And once the dust settles, I think the consumption and the infrastructure segment should also perform well. So I think broadly, strategy would be to focus on domestic-based sectors. Obviously, in current short-term scenario, things are looking volatile. But as the situation improves in few weeks, I think domestic-based sectors are the ones who should show a sharper rebound.
Okay, so that's the view with regards to where some of these names go in the banking space. But the next small cap counter that we're going to talk about is our systems. Now, the stock has gained as much as it gained an intraday high of almost 13%, still trading at that 12.5% higher mark. And this is the biggest move that it's seen since August 2025. Now, we have Jasmeet joining by to tell us as to what the company does and what is actually leading to that rally. Jasmeet, over to you.
Well, Mahima, thank you for that. If you look at the overall counter, it's buzzing on the back of heavy volumes, and the volumes for today are at 200 times the 20-day average. And as rightly said, the stock has been buzzing and traded up over 13%. But if you look at the overall stock performance, the stock is down about 20% in the last 6 months and down 20% again in last 1 year. But if you look at over YTD basis, the stock is nearly down 31% in just last 2 months. So we see heavy fluctuation coming in the stock performance. If you look at what the company does, well, company operates in IT space where they provide AI analytics as well as knowledge sharing services to the clients. They help in digital transformation, digital servicing of the client portal. Now, if you look at the Q4 numbers of the company, the company follows the calendar year. So this particular quarter which went by was the Q4 for the company. In the Q4, company did see a good strong growth of revenue, double-digit uptick, while the net profits got impacted on the back of that labor code. If you look at overall order book, even it has shaped up healthily in this particular quarter. What led to the overall gain in the margins was the overall volume growth as well as the rupee depreciation which happened in the previous quarter helped company increase the margin span. Now, if you look at the key numbers on an annual basis for CY25, that's the annual year of 2025, we do see that the revenue is up 12% while the EBIT margins are expanded 120 basis point and the management has come above the 12% range when it comes to the margin portal. While the net profit, it sees a heavy jump of 42% on YOY basis. Now, lastly, we look at the other key highlights. Over the last 5 years, we have seen the margins improve from 13-14% to 16%, while on the other hand, if you look at the overall net profit has nearly doubled since 2020 from 84 odd crore to 186 odd crore. So all in all, we do see a strong financials where the stock is tanking in trade today on the back of the gaining into on the back of heavy volumes.
Okay, all right. So that's the Horit Soul view coming in on our system. Narendra, your quick view on this one. It's seeing a huge uptick in trade today, especially in markets like these.
Right now, we do not have any active recommendation on the stock, so would not be having any view per se on this.
Okay, all right. So that's with regards to where our system goes. But the other counter, that we're going to talk about is Titan Biotech. Now, the company's overall stock performance has been very strong. This is the fourth consecutive session, which is where it is seeing gains today, up 7.8%. The stock is almost up 44% in the past 4 trading sessions. The company basically is a manufacturer and exporter of biological products. So it makes counters like food ingredients, collagen and protein products, pharmaceuticals and nutraceuticals, animal nutrition, probiotics and fermentation ingredients. Also makes agricultural products as well as culture media. In terms of where the revenue split goes in FY25, 75% of the revenue came in from domestic markets and 25% came in from the export markets. But if you take a look at the overall financial performance, in terms of where the company goes from a slightly long-term perspective of how it's done in the past, compounded sales growth in the past 3 years has been just at that around 8% mark. I mean, if you take a look at a slightly long-term view as well, 5 years it's just done around 11% and over that 10 years it's done around 15%. So not much in terms of where the CAGR growth goes for the top line. There's been no profit growth at all in the last 4 years. Of course, company became profitable 7 to 8 years ago. But in the past 4 years, the profit number has overall remained in that 5 to 6 crore range. So no growth coming in with regards to where the profit numbers go. And this is also because the raw material prices for them have continuously increased. So that's putting pressure on the margins as well as the bottom line. The ROCE for the company was very strong, but it has been falling. It's come to the overall 17% mark in FY25, which was almost a 58% in FY21. Operating margins have also declined significantly in the past 4 years, like I mentioned, raw material prices being the concern, and stock is currently trading at around 7.8 times its book value, so slightly expensive with regards to how it's performing. Narendra, I'll quickly come to you on this one. Any view on Titan Biotech?
Yeah, again, we do not have any coverage, so no view. But yeah, I really concur with you regarding the details shared. Plus, the only positive factor for the stock is that it is operating into a segment which is right now in a high growth phase, and there is a lot of tailwinds in the different segments, be it nutraceuticals, be it collagen proteins, be it animal nutrition. So I think ultimately the performance would be the key benchmark wherein the returns of the stock would be seen accordingly.
Okay, so that's the view on Titan Biotech. But with that, we're completely out of time on this edition of Small Cap Buzzers. Narendra, thank you so much for taking out the time and helping us with all those queries. But viewers, do not go anywhere. We'll be right back with Ask Profit on the other side of the break.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
It's okay, yeah.
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me, as always, is Mahima Vachajani. And over the next half an hour or so, we'll try and solve all your stock-related queries. To start sending them on the numbers that will start flashing on the top of your screen. You can also call us, talk to us directly for your stock-related queries as well. Before we do that, It's been a tough day for the markets and kind of like an earthworm in that sense. We've consistently stayed at the bottom of the screen, and the pressure has continued throughout in terms of a 2.5% downtake. We are above the 23,800 level. We broke that level in the morning, which was a psychological long-term support. And as our technical and fundamental guests have been highlighting to us, that 23,800, while being broken now, we will be continuing to monitor that over the next couple of days if we can build on to that. So hopefully, if the market continues to be as is, which is too much to ask at this point of time given the geopolitical conditions, it seems to be, Mahima, that will be a tough one essentially to maintain that support at 23,800.
Yeah, I think we just moved past that 23,900 levels for a bit, and then again just came back from those levels. So yes, I mean, you know, as Puneet rightly put, I mean, it's in these markets, I think any little relief is something that should bring you joy, to say the least. But the broad end of spectrum,
but where is the joy
I hope
today?
it comes at some point of time, and it will, right? But with regards to where the benchmarks go, slight relief, you know, with regards to where the broader markets go. The mid cap 150 now trading around that 2.7% lower, the small cap 250 around 2.8% lower. But largely the sentiment remains negative across sectors. I mean, we've seen the way auto, PSU banks, private banks have fallen in trade today. With regards to where the BSE 500 also goes, let's quickly try to pull that up, because that will give us a picture as to how stock-specific movement is looking like. You have counters in the red in that range of 6 to 11% lower. But on the flip side, Chemplast as well as Affle, India Mart are some counters that are doing fairly well, but that range is just 1 to 3 odd percent. Just Chemplast is the one which is standing out with that gains of around 7 odd percent in the broader end of spectrum. Let's quickly pull up the advanced decline ratio as well to see as to whether that number has moved, slightly moved. 260 advances is what we are seeing versus at least what we saw in the morning, right? What was it, 163?
164 as the new low, but
yeah.
Largely even in the broader markets as well, the trend seems to be at least on the downside. And while we're seeing in terms of the mid cap and the small caps, the pressure continuing to be there, it is important to get and start your stock related queries as well. So we will of course be welcoming in both our fundamental and technical guests very shortly. But largely a day where we've consistently seen, and Amardev Singh, he will be joining us on the technical side as well. And we'll just wait if we have them right now as we speak. But continue to monitor all those things. The other aspect, let's pull up the sectoral heat map also very quickly, because you've seen Nifty Auto as a pack continuing to be under pressure today. So stock was down almost 4.8% and it's still around there. The PSU Bank Index was down almost 6.5%, now has recovered slightly as well. But at this point of time of the show, let me welcome in Sameer Darar. He's of Natwalal and Sons Stockbrokers Private Limited. On the fundamental side, Sameer, very good afternoon. Thanks so much for joining in. It's been a while since we've spoken to you here on Ask Profit, but largely before we go ahead with our stock related queries, which camp are you sitting on? Are you in the camp which is stay away from the markets for now, don't try to catch the falling knife, or are you looking at some opportunities that have become very lucrative at this point of time?
Yeah, so actually you're right. I haven't been on for a while, but having said that, I think I'm on the camp that says that, look, you got to be a little cautious at this point of time. We don't know how much this is going to continue, how much further it can go on, and how much further the market can fall. Because the basic thing still stands that if crude keeps moving up, that definitely hurts the India story from two angles. One, either the government takes a hit on its fisc, or inflation rises. And if inflation rises and interest rates increase, then the India story takes a massive whack, right? Because that's the story we have, that India's now consumption story is going to pick up. So from that perspective, what we have, we continue to hold. Am I saying that we should not do a little bit of purchasing all out? No, I'm not saying that, but be very, very selective. Make small purchases. You can't be on just, not do anything altogether, or go out and just buy everything. So it's got to be very selective, very small quantities. And one thing I will definitely say, it doesn't make sense selling at this point of time, because I think a lot of the negativity is already priced in. So it's be very selective, but don't sell aggressive.
You coming in from Sameer Dalal, but viewers who are tuning in, you can give us a call or WhatsApp us all your stock related queries. We'll be more than happy to answer them. Sriram Raghuraman has done the same. He's writing us from Chennai, asking about Max Estates. He's got 100 shares at an average price of 26. He wants a fundamental view on this particular counter. Sameer, he's sitting on profits of around 35,000 odd rupees. What's your view? Any view on Max Estates first of all, and your overall view on the real estate space?
Yeah, so we do have a view on Max Estate, and we think, look, the long-term growth story still remains quite intact. But the point is that what we just discussed, if interest rates rise because inflation is rising, then the entire real estate sector does face a bit of difficulty. Secondly, with crude prices also moving up, what it will lead to is energy prices moving up, which in turn will lead to cement prices moving up. So the real estate sector, which has pre-sold a lot of projects, what happens is the profitability to some extent gets affected. So for the time being, I think it's a wait and watch situation on the entire real estate space. I would not be in a hurry to buy, particularly on Max Estate. Like you said, like I said, the long term is still okay, but in the short term, the stock can continue to move downwards. Given these two factors, which I just pointed out to you, that fresh sales may slow down and cost of doing the construction of the pre-sold projects will go up, which shrinks margin. So short term, not good. Long term still remains good. The point is, if he has a long-term view, wait for corrections to buy. If you are looking from a short-term perspective, I think booking profits at this point might make more sense because the stock could continue going down.
Got that view, Sameer. But let's go across and take a first caller from Bengaluru. Pramod has a stock query for us. Pramod, good afternoon. Welcome to the show. What's your query?
Yeah, good afternoon. Actually, I want to get into Sirma SGS Technologies.
Okay.
With a long-term view. Actually, is it the right time to take entry into this stock?
Okay, got that, Pramod.
Being EMS is the future, I guess.
Got it. And do you have any other EMS plays in your portfolio? Any Dixon Keynes, or is it just this first stock?
Yes. I have Dixon Technologies. I bought it around 10,000 shares.
Okay, so this will be the second stock in that sense. Got it. Got your question, Pramod. Sameer, Sirma SGS actually has been a rank outperformer, right, compared to the other EMS players, but I guess the market's slightly more scared given that almost a fourth of its revenue comes from the exports, and that market might now be impacted. It's just a theory, but of course there are so many right now, right? Would you suggest Pramod to buy into Sirma SGS right now? He also has Dixon already in his portfolio.
So Sirma SGS, we don't have active coverage on at this point of time, so I won't comment on it. But coming to the fact that you're saying exports might get impacted, I'm sure some amount of exports will get impacted. But the worst of the export business, we know what the tax rates are going to be for exports to the US and all the European Union. So that is not a major concern. The major concern right now has to do with the fact that the Indian economy by itself might take a hit. I don't have view on that, Sirma SGS per se, so I won't comment. But I can say that we are constructive and positive still on the EMS space. We think if the war subsides, sooner rather than later, and crude prices move down, the India story still holds, then EMS players will be benefactors. The question now comes is how much investments you should make at this point of time. Like I said, be very selective, make smaller investments. I stand by that. Even in